This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Never in the history of the show, going back 22 decades, three decades, have we opened with BitDog.
Yes, exactly.
There we
right.
are. I mean, I'm sorry. I feel like it's 10 a.m. and we're ready to go here. 79,000 when I walked in the door.
Yeah.
And we are getting redemptions from ETFs. We've heard that from Emily Grafeo and Belchunas, I believe, scheduled sometime in March.
Right, exactly. Depending upon the selling train coming up. It feels like a risk-off move here in the marketplace. Concerns just in the marketplace. We've seen it across different asset classes, Tom. Tariff talk and trade talks, and just a little bit of uncertainty out there. And boy, if you have that feeling, get rid of your Bitcoin.
But the basic idea is that the election, or even the week before the election, moonshot straight up.
Exactly.
Trading zone. Let's sell some ETF shares. And we're not back to the election, but we're getting there rapidly.
Yeah, I mean, you think back to just, early September,
60-ish.
This thing was at, $53,000 per token. Then again, on the back of the
token,
election.
listen to you.
Exactly. It rocketed up to, 107,000 per token. Now we're off about 25% from that high, just in the last probably 5 weeks or so.
Sliding to March, John Tucker, surveillance daylight saving time correspondent says it's a week away.
We're getting there.
Sweeney in Duke garb today.
Yes.
Is this like March Madness is upon us?
We're getting ready. We're getting into March, and then it gets serious here with the ACC tournament and then the big dance. So we're getting ready here.
We have to get serious. We've worked all night on an eclectic group of guests. The 7 o'clock hour, we're really going to focus on the markets. Joe Quinlan, Kim Dawson with us, and others, as we really look at it's a 4% pullback. It's not a correction, but there we are, folks. But there's a lot going on as well, including week, your own important press conference. They say like 1 or 2 p.m.-ish. Okay. But yesterday it was 3 hours late.
Exactly. So it's okay. Worth the wait.
There's a press conference, we think, this afternoon from the Interactive Broker Studios, a Bloomberg Business Flash only. Lisa Mateo.
And we've got futures recovering. I guess you can call it a post-NVIDIA hangover. Yeah, shares up nearly 1% for NVIDIA after falling 8.5% yesterday. So let's get to futures. We'll start with NASDAQ futures up about 0.1%, 33 points. Dow futures up 0.3%, 168 points. S&P futures up 0.2%, or 16 points. The 2-year yield, 4.05%. That's little change, and the yield on the 10-year, 4.26%, and that is little change. A different picture when we start to look overseas. Stocks in Asia really taking a hit after China said it would retaliate against President Trump's tariffs. Right now, the Hang Seng down more than 3%. That's affecting U.S.-listed Chinese stocks, too. Alibaba down 4%, Baidu down 2.5%. You even have PDD off about 3.5%. Stocks in Europe, too, mostly slipping. The UK's FTSE, the exception right now, that's up about 0.3%. But that's after upbeat talks between President Trump, Prime Minister Keir Starmer. We go to the Bloomberg Dollar Spot Index. That is little change right now. But like you said, Bitcoin is the star. It is taking a hit right now, down more than 4.5% at just above 80,000. Investors rushing to these safe assets after President Trump's latest tariff threats. Its value has actually dropped more than 25% from its all-time high set about 6 weeks ago. Crypto-related stocks, Coinbase down 3%, Riot Platforms off 4%, and even MicroStrategy, that's a software company that really bet the house on Bitcoin, is having a rough time. It's down 2.5%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. One of the highlights of the week was David Rosenberg with Brian Moynihan. Really thought it was just fabulously informative. And Mr. Moynihan went in and described the roll-up of an Italian bank in San Francisco across this nation into the modern Bank of America. There is no one more associated with the strategy of the Bank of America roll-up, Joe's going to love this, than Merrill Lynch's Joe Quinlan. Joining us now this week with U.S. Trust, Bank of America Private Wealth Management is Joe Quinlan. Joe, let's follow on from the Moynihan comment. I mean, there was a point there with the roll-up into the modern Bank of America where week to week you weren't sure who you were working for, was there?
Tom, particularly during the great financial crisis, you're right, absolutely. But We saw the consolidation. We saw the leadership come from Brian, and here we are today.
Exactly.
We're a combination of many things.
He's never gotten the credit, folks, for the pieces he picked up. I was in Singapore when it blew up, and Moynihan's never gotten the victory lap on what he did. Joe Quinlan, let's start with your experience in the emotions like on this Friday morning. What do long-term 3-year hold retirement investors do given the present set of emotions?
Well, Tom, it's a good question because we talked a lot about this yesterday at our investment strategy committee. And basically, hold the line and be ready to step in on a greater pullback. As you said, it's 4%. We're looking for something closer to 5 to 10%. More downdraft. There's worry about the growth, the tariffs. We get it, but stay in the market, stay high quality. I know it's a cliche, but we have a lot of people, not ready to panic, but they're worried. And you can see that, whether it's the real economy, whether it's the investor. So stay in the market, be ready to be rebalanced, buy these pullbacks. That's our main message.
So, Joe, from your perspective, what are the real concerns out there for the marketplace versus much of the noise that we're all trying to navigate on a day-to-day basis?
Yeah, Paul, number one is just, tit for tat trade tariffs, right? I mean, with that's hugely important. Anyone who knows history knows what happened in the 1930s. It's going to be a slippery slope. So we're watching that very carefully. But so far, with the U.S. tariffs and the response from China, we're at 20%. So nothing dramatic, but something we're watching very carefully. And then the other is just the U.S. consumer. The U.S. consumer powers our economy. And yes, lower income households are struggling. They're pulling back. But higher income households, they're still out there spending. They're going to keep at least GDP, I think, in Q1 around 2%. And that's not bad, real growth. And that's kind of like the basis. Q1 seems a little soggy here, but that U.S. consumer is key, and they're okay.
If at 8:30 this morning we get a reaffirmation of, let's be polite, sticky inflation, is inflation good or bad for the stock market?
Tom, I would say it's relatively good because, as you know, nominal GDP drives earnings. And so if you've got good, solid growth, 2.5%, a little inflation closer to 3 than 2%, corporations can live with that. In fact, they can drive earnings. So, if you told me it was above 3%, then the Fed's back in the game in terms of raising rates. That's a different story. But we're kind of in that sweet spot right now.
Yeah, my place on this, folks, is corporations adapt. That's what I've learned over the years. We welcome all of you across the nation on your commute this morning. Good morning, 99.1 FM and really fractious. Washington, 92.9 up in Boston. Bloomberg, 1130. Good morning, Kansas City. Kelsey returns.
Yes,
did you see that?
I saw that. Big news.
To the Chiefs.
Exactly, sure. Why not bring it back another year? Hey, Joe, we had NVIDIA yesterday, and for the average casual NVIDIA viewer, it seemed like a really good quarter, the beat and raise, all that kind of stuff. But how do you think about just kind of the exposure, the concentration risk of this market? It continues to be a concern for a lot of people.
And it should be, Paul. I mean, we saw the Mag 7, whatever we want to call them, around 32% of the market cap. It's come off down about 29, 28%. It's healthy, right? This pullback in some of these high-flying companies, they're great earners. They're going to drive growth, innovation. But I think, I wouldn't call it mania, but we saw too many people just buy NVIDIA. We had that, but just buy the Mag 7. It's healthy that we're letting some of the steam out of this. It's not a bubble, but mania, so to speak. So our clients are looking to go into the 493. They're going to diversify industrials, healthcare. We're seeing a much better breadth in our conversations with our clients.
So Lisa Mateo Factor, YouTube, Bloomberg Podcasts exploding this week, I should say. Subscribe out there to Bloomberg Podcasts. You do that out. You go YouTube, Bloomberg Podcasts, and you can subscribe there.
One click.
Paul with a brilliant note. It's a layup for Joe Quinlan, Paul.
Yep.
This is Paul on YouTube, I should say. There are no straight lines in investing. Buy a CD if you want a straight line.
There you
go.
That
says it all.
So, Joe, here, what do you look for here? I think as we think about 2025, I'm not sure how much the Fed is going to do for us this year in terms of rate cuts. So it just feels like if this market's going to move higher, it really is going to be dependent upon earnings. What's your earnings view here?
Well, you're right, Paul, in the sense our economists thinks the Fed, they're done this year, that they're not going to do anything. So it's going to come down to earnings. And I do think corporate America is going to surprise to the upside again in terms of driving growth, being productive, leveraging their resources, working around the tariffs. I mean, honestly, corporate America does not get enough credit about how nimble they are. And I know everyone loves Europe and they love Japan right now, those equities, but our companies are just faster on their feet, more adaptable. So I think earnings expectations are going to warrant more upside, pretty good upside between now and the end of the year for the S&P 500.
Chuck Quinlan, have we forgotten a single-digit return is appropriate if you have an actuarial assumption taking out real GDP, taking out a demographic growth, a productivity growth, that you're not supposed to do 11% per year? Have we forgotten that?
Tom, I don't think so. I mean, we talk a lot with our clients about that. A lot of them are, just kind of don't want to lose what they've earned in the last, particularly in 23 and 24. They're worried about the politics, the tariffs. So, but we do have to remind our clients that, 20% returns plus 2 years in a row, get ready for something that's different than that, for sure.
Hey, Joe, you mentioned Europe, and, it has performed very well so far this year in 2025, and it always screens well on a valuation perspective, a significant or meaningful discount to the U.S. How do you think about just Europe here?
I mean, Paul, we like Europe, we're warming up to it. But remember, a lot of these big names in Europe, they are valued for sure. But they make more money in the U.S. and also China than they do at home. What's lacking in the European equity story is just growth in Europe itself. Yep. So if you could convince me Europe was going to get on a long-term growth path, which I think there's not many people in that camp, I'd be more bullish. But Europe lives off the rest of the world and not their own domestic demand. So they're not there yet, but good companies for sure.
I mean, Paul, this is before Joe Quinlan's time. I mean, he's a young guy. 1981, we cratered down 10% in the Standard & Poor's 500. Go to cash. The next year, we were up 15%. The next year, we were up 17%. In a difficult 1984, we were up 1%. But I see a lot of double-digit return.
Yep.
And with the moldy years, that's how you get that single-digit return.
That's how you get there. And, hey, Joe, how about valuation here? A lot of folks are saying, hey, if you pull out some of the Mag 7 names, this market's not overvalued here, particularly with maybe a double-digit earnings outlook here. How do you guys think about valuation?
I mean, you're exactly right, Paul. When you pull out Mag 7, look at 493, look at some energy, some of the financials, some of the transportation. I mean, there's some value in this market, and it is value over growth. So we're looking at it very carefully. So this market's not overbought. I mean, no way. I mean, we still have some upside. I go back to that U.S. consumer driving growth. As Tom talked about, stickier inflation. Actually, that's good for earnings. So the backdrop, at least for the next couple of quarters, is pretty solid and will help drive. And with that overall arching valuation not being stretched amongst the 493.
Even with a pop off the pandemic, I'm looking at Chevron in the news on Venezuela and President Trump. The 10-year return on Chevron, just 7.2% per year.
Right.
Back 10 years.
Yep, exactly.
I mean, it's just single digit. I mean, it's just like, it's not Apple.
Hey, Joe, I don't know, as you guys screen out this market here, whether it's by sector or by factor, what screens well for you guys these days?
I mean, that's our work. Savita does a great job, and her team does that screening out. And what they're screening for is high quality, good cash flow, the dividend payers for sure. Nice. No doubt about that. The small cap trade hasn't worked for us, where they're still struggling here. But nevertheless, it's we need companies. You want to invest in companies that can just take these blows, these headline blows, and it's reactive, it's risk off. But day to day, they're out there churning, they're building. And they're going to grow and give you return.
I mean, you mentioned Savita Subramanian, folks. Let me make clear, no one in the industry did a responsible review, data-driven of ESG like Savita Subramanian in Bank of America. Joe Quinlan, from your view, ESG's changing. Companies are adapting to the new president. Companies are adapting to a new ESG. Is that going to be profit-centric for our listeners and viewers?
It's going to be, Tom, but like as you said, there's a reset with the ESG, but that doesn't mean we're not going to go renewables. That doesn't mean we're giving up on climate change. I mean, so there's a reset there, but these are good companies. We need energy. We need energy from all sources. So to me, the ESG reset I think is healthy, and I think there's going to be good companies that emerge from that reset that you're going to want to own. And Savita will tell you first what to own and be way out in front of it. I'm sure of that.
Joe Quinlan, thank you so much. Ample time. Joe Quinlan of Bank of America with us today. Cam Dawson scheduled again on these equity markets. I got green on the screen, but it's fragile. The VIX well over 20, 21.05. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. President Trump is getting ready for another pivotal meeting today with Ukrainian President Volodymyr Zelenskiy. Bloomberg's Amy Morris has a preview from the nation's capital.
President Trump expects to sign a deal with Zelenskiy, allowing the U.S. access to Ukraine's minerals in exchange for military support.
We're going to have a very good meeting. We're going to get along really well, okay? We have a lot of respect. I have a lot of respect for him. We've given them a lot of equipment and a lot of money, but they have fought very bravely, no matter how you figure it.
But a White House national security official tells the New York Times the deal does not include any guarantee of future war funding, a difference that is expected to be at the center of this meeting. In Washington, Amy Morris, Bloomberg Radio.
Thank you, Amy. After the meeting, the two leaders will hold a news conference at 1 p.m. Wall Street time. You can hear that live here on Bloomberg Radio or watch it live on the Bloomberg Podcast page on YouTube. The mystery grows into the deaths of two-time Oscar winner Gene Hackman, his wife Betsy Arakawa, and their German Shepherd. Police in New Mexico have now ruled the deaths suspicious. Authorities say there are no initial signs of a natural gas leak or carbon monoxide in Hackman's Santa Fe home, but they add it is possible the gas could have dissipated in the time between their deaths and when authorities arrived on the scene Wednesday. The front door was open. Santa Fe Sheriff Aiden Mendoza says in terms of potential causes of death, everything is on the table.
It's not normal to find two people deceased in a residence. That's concerning. And then there was also a dog that was in a kennel that was also found deceased.
Sheriff Mendoza says they will do an autopsy and a toxicology on the bodies to determine whether there were drugs in their system or was there carbon monoxide in their blood. Egypt says negotiations between Israel and Hamas on the next phase of the Gaza ceasefire have begun in Cairo. Egypt's State Information Service said officials from Israel, Qatar, and the U.S. started intensive discussions. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, let's get set for the Friday. Let's look ahead into next week and into March, the last month, the first quarter. And as so much, I listened very carefully yesterday to Ed Yardeni, which is basically just get to Q3, Q4. But there's so much turmoil now. Look out, if you can, into the end of 2025.
But it'll be interesting to see what happens with some of these, the tariffs that the initial round of tariffs in China that went into effect last month and the ones that may go into effect in the next couple of weeks, what that will do to growth data, what that will do to inflation data in the back half of the year.
I'm on growth. I'm more, and I may be wrong on this, folks. I by no means am assured, but I'm really looking at growth. Do we get this dynamo down under, say, 2.2% real GDP? Some people saying under 2. And the answer is we've been wrong on that for 2 years.
And the reality is we really have no idea what's going to happen with the tariffs. They could very well just end up at the end of the day just being negotiating points, in which case then it's all for naught. But again, economists, you got to plug it into your models and you got to be willing to talk about it here, what could happen. And companies the same way. You think about the companies and the guidance they were giving or the lack of guidance they were providing on the remainder of the year, due in part to the uncertainty here. So that's kind of ruining the day here. And again, the equity market's a little bit of a 4% pullback, Tom, a retrenchment, a little bit, 4.5% here off the top.
Retrenchment?
Retrenchment.
Is that what you learned
exactly.
to do? It's not a retrenchment. I mean, it's down.
It's a stumble.
A correction is 10%.
Yes.
Folks. A bear market is 18%. BitDog's more than that.
Yes, it is. We're 25% off of that high.
And on a standard deviation basis, we're through -2 standard deviations. On a daily chart of Bitcoin. Good morning, Melissa Shin up in Toronto for Bloomberg News. And this goes to the tariffs. Bloomberg reports that Doug Ford of Ontario wins third majority in Ontario amid trade war fears. Mr. Ford is really precise about retaliation.
Okay.
We're gonna have to see her if we get these tariffs.
This could get serious.
Well, no, he's serious. He also guaranteed finally the Toronto Maple Leafs would get into the finals of the. He didn't predict a win, but he said maybe the Maple Leafs one of these decades can actually, sneak into
what happened to the
they're like the Cowboys. They make so much money.
Yep, and they don't
have to be good.
Yep.
There's not the desperation like there is on the Boston Red Sox. The Red Sox are desperate.
Yes.
Duke is desperate, right?
Yeah, well, they're gonna win it all. They're taking it all this year.
We'll have to see on that. We say good morning to all of you on economics, finance, investment, and international relations. We're sort of ignoring that here, but we'll do much more as we get towards the 9 o'clock hour, 10 o'clock hour. A busy day at the White House with Mr. Zelenskiy scheduled to visit again, and a press conference scheduled for this afternoon. That will be most interesting. I talked to David Gurry yesterday, and really on top of that story.
He was in Hawaii. He took the whole fam to Hawaii. Who does that? Just go to Florida. Go down to Boca. No, he takes the whole family 17 time zones away.
They watch reruns of Hawaii 5-0 when they were out there. Dollar stronger. That's what you need to know. The euro was a 103 handle, now 104.04. Futures up 15. The VIX 21. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Well, we got futures this morning trying to fight back after yesterday's losses. Investors weighing tariff threats. Also, more inflation data out today. About an hour from now, PCE price index. We'll also get data on personal income and spending as well. So ahead of it, we have NASDAQ futures up 0.1%, Dow futures up 0.3%, S&P futures up 0.2%. The 2-year yield, 4.05%. That's little changed. And the yield on the 10-year, 4.25%. And that is little change. To Bitcoin, fell as much as more than 7% this morning to the lowest since early November. Wow. Right now, it's down about more than 4.5% at it, just over 80,000. We go to the Bloomberg Dollar Spot Index, up about 0.1%. Over to earnings, shares of Dell lower, down more than 3%. Its sales outlook for AI servers, well, that really failed to alleviate those concerns about profitability. Then we go to HP, down more than 2.5%. Outlook missed, rising component costs, tariffs on goods from China. It also said it's going to cut about 1,000 to 2,000 workers through the end of the fiscal year, and that's going to save an additional roughly $300 million per year. And where we are seeing a lift, that's energy drink maker Monster Beverage, up 2%. Fourth quarter gross margin topped estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Not down 2 standard deviations, but a frenzy, I say, 48 hours ago. NVIDIA's not on the bid.
No.
There it was 150, 140-ish is sort of the moving average tendency. And we're down $20 over the last couple of days.
And that was kind of my question to Dan, or actually Gene Munster yesterday. I was just kind of, if this story,
I saw that interview
for the last 2 years, it's been beat and raised by a factor of multiple billions of dollars.
Yeah.
Now they're not going to be able to deliver that anymore. So you have to kind of, what drives the stock from here? I don't know, other than it's a great long-term story. But again,
maybe just GDP growth, and that's the mystery on this Friday morning.
Interesting.
One of the ways you see this is the litmus paper, the foreign exchange market. Jyoti Badraji joins us now, global foreign exchange strategist, TD Securities. Thank you so much, Jyoti, for joining us. Is the resilient dollar broken? I'm looking at DXY at 107. It's barely budged, but I got a lot of emotion in the foreign exchange market, don't I?
Yeah, thank you so much for having me. And yes, I think dollar has had quite the start of the year. I think what has stood out is basically a lack of conviction amongst investors and a lot of fatigue with respect to the trade uncertainty and all the headlines that markets have had to digest. And I think the best play that FX investors could then go to is basically fading market positioning. At the start of the year, everyone was in the long dollar trade, and because of lack of certainty amongst investors, everyone was just trying to fade it, and that was the only trade at play. I think that's basically what has happened. But right now, markets seem to be severely underpriced for the risk of tariffs and the trade uncertainty, which is why, even our positioning indicators are saying that dollar is looking much more neutral now than compared to where it was at the start of January.
How do you fold foreign exchange capital flows into the growth worry? If there's a real GDP worry, whether it's China or the US or, Europe, Germany in recession, are you seeing capital flows within the foreign exchange market shift because of weaker growth worries?
Not yet, but you brought up a very significant point, which we've been also flagging to clients, is that if you look at the growth and inflation outcomes throughout the world, the US is the only country which has positive growth and inflation outcomes, whereas a lot of other important economies of the world, including the euro area, are edging in the stagflationary regime. The second bit that markets are trying to digest is what will all this trade uncertainty do to growth, which is why we've seen recent moves in the market where markets are starting to get worried about the growth side. But when you try to think about what the growth implications would be, I think one important distinguishing factor is that the US is a large closed economy, whereas a lot of the other economies of the world are more trade dependent and are more reliant on trade with the US. To put some of those relationships into a proper perspective, 75% of Canadian exports and 80% of Mexican exports are coming to the US, but only 18 and 15% respectively are going from the US to these countries. Even the euro area's reliance on the US is at least 2.5 times more than the US's reliance on EU. So when you think about the implications of trade uncertainty, it will definitely be a growth shock for the rest of the world, given their trade dependence. But for the US, the first order effect would be an inflationary shock, which should widen the growth and the rate divergence between the US and the rest of the world, which is why we are cautious of investors turning bearish the dollar solely on positioning itself.
So, Jayati, talk to us about the Japanese yen, because it's had a big move at 160 down to 150. We broke down earlier in this trading session below 150 here, strength in the yen here. What's your call there on the Japanese yen?
So we do think that, we are, generally bullish the dollar, but one currency which we think can survive dollar strength better than its peers is the Japanese yen. And that's coming from a few reasons. Number one is clearly the BOJ hawkish pivot. I think now more than ever, there is reason for the BOJ to remain hawkish. They have hiked in July, they hiked recently. They have ample evidence which tells them that the economy was able to handle the hikes. Now with the pressure of, let's say, in order to avoid, the yen is often associated with currency weakness. And, Trump has often mentioned that the Japanese yen seems too weak versus the dollar. In order to avoid all of those, mentions as currency manipulators, I think the BOJ has now more than ever a reason to hike. We have seen the data, the wage trends, the inflation trends, all of them remain positive. In fact, Japan has a lot more reason to keep pushing the fiscal button itself. Right. We saw how elections went. So the only way they can retain any popularity locally is to keep doing more and more fiscal, and even that is inflation.
Right. Jayati,
that's why,
we got to run here, but one more question, if I could, not to be rude, but the basic idea here with the European Union, is it easy for them to cut rates now on weak growth? Is that like an effortless next move for the ECB?
Yes, I think so. I think there's a lot of uncertainty around the terminal rate of so many important economies around the world. with the US and Fed being the prime example. But one place where you can say with greater certainty that rates need to move lower is clearly the ECB and the euro area. The euro area is extremely trade dependent, not just with the US, but also indirectly through China. And China, we all know, will be the obvious target under the new trade policies that we are debating. So through both direct and indirect channels, the growth shock for the euro area will be significant, such that even if inflation takes its time to come down, the ECB will have to prioritize the growth channel and will have to keep cutting here, which is why we have the ECB cutting, at least in the next 3 meetings. And they might be one of the first central banks who might be debating taking rates below neutral into stimulative territory.
Valuable. Thank you so much. Greatly appreciate it. Jyoti Baraji with us with TD Securities there on foreign exchange as well. I don't know if we're doing this today. Lisa, jump in here. I enjoyed an egg yesterday, or I should say eggs plural, at a 108 count, $1.08.
Per egg, did you make?
They were $12.99. And I let Whole Paycheck do the math for me, and it was $1.08, which is more than double the plain vanilla ones, which right now say out of stock.
Was it worth it, though?
It was worth it.
Amazing?
It was a fancy blue egg. Why are they blue? I have no idea. Is it like Easter eggs? I don't know. Anyways, the answer is I could not tell that it was $1.08.
No, it didn't taste any better.
Tasted great.
All right, so yesterday on Bloomberg Intelligence, apparently Bloomberg News has a chicken and egg reporter.
We do.
In Chicago. And so we had this reporter on, and basically my takeaway, it's going to take several months for the chicken farmers out there to kind of rebuild their flocks to get the whole chicken egg thing going again.
Yeah, because we were asking yesterday, how long does it take before it can
take
lay an egg?
And there's a train of thought, folks, that it's not just the bird flu, that there's more going on here, like the emotion of hoarding.
Hoarding, they
are.
Hoarding
Think
eggs.
about old
them.
communist nations where there was nothing in the store because you bought it when you bought it.
Sure.
Hoarding them, stealing them off of trucks. It's getting a little crazy.
The key metric here is, did you say that you buy eggs, they can stay 5 weeks in the fridge?
About 5 weeks in the fridge, yeah.
Okay.
So you can hoard, come on, Lisa, for your son.
Shush.
How many dozen of eggs?
He's been cut back.
Oh, no.
He's cut off. There's a Post-it on the fridge.
Easy on the eggs. Easy on the eggs.
Along with a few others that we can't talk about on radio. Lisa Mateo there, the egg report this morning. I should point out the eggs I paid $12.99 for are also out of stock.
Okay. All right.
It's a group effort, but they've been great about it. They've been very fair about it. I haven't seen the cheaper eggs, seriously, at Whole Foods, Amazon. They have not goosed the price up. They've been really responsible about that. Futures up 12. Dow futures up 161. Cam Dawson, I don't know if she's next.
Studio.
She's somewhere in the house. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures battling back after yesterday's sell-off as the S&P 500 heads toward its worst month since April. We'll start with S&P futures, up about 0.1%. We have Dow futures up 0.4%. NASDAQ futures are a little changed, down about 18 points. The two-year yield, 4.04%, down 1 basis point. The yield on the 10-year, 4.25%, and that's down 1 basis point. A rough morning for Bitcoin. Right now, it's down more than 4.5%, nearly 5%, at just over $80,000. 30,000. NVIDIA trying to recover after falling 8.5% yesterday. Right now, it's a battle. It's down about 1.5%. Few companies making news. Meta said to be in talks with Apollo for a $35 billion financing package. It's to help them develop data centers in the U.S. Sources say KKR might also be a part of that investor group. And finally, JP Morgan, 2 venture capital firms investing $10 million in Fair Play. It's a startup that helps banks eliminate bias against their customers when they use AI. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate it. This is a really important conversation coming up here with the markets, the emotion of what's going on, whatever your politics in Washington, the VIX from a 17 out to 21. Cameron Dawson joins us now with New Edge. She's been just absolutely fabulous, and beneath the charm and the real belief in the markets is some bulletproof knowledge. Barry Ritholtz, 10 years ago, he's out with a new book, which we're all going to have to read. Barry Ritholtz is How Not to Invest. Barry Ritholtz in 2015, when it was all the lather, oh no, the death cross, never mind. And he goes through in 7 paragraphs and blows the thing out to smithereens, including help from Jim Bianco as well. How does Cam Dawson use moving averages?
Well, first, big fan of Barry, really excited for the book. And we do think that these moving averages are really important as a sign of the trend. We've been in, since the beginning of 2023, this very powerful, unrelenting, up and to the right kind of market. And it's had extraordinary returns. And our view for this year is that those returns would level out, meaning that you would see more of a sideways choppy range. That translates to things like the 50-day in the S&P 500, potentially crossing below the 100-day, where we start to level out in our returns. And effectively, the message is get used to this volatility that we are experiencing, and don't think that we're having this low volatility up and to the right kind of market that will persist.
So from your perspective, what would be a healthy drawdown, as the kids call it? I call it a sell-off, a pullback, whatever. What would be a healthy one in an otherwise healthier, longer-term market?
We think the most important thing would be to find support at that 200-day moving average. That has been incredible support ever since the 2022 lows. That's around 5,700. And so that's not that far from the all-time highs that we had. It's about 7% from peak to trough. It would be about 4% down for the full year, for the year to date, that is. So that's a very healthy correction. And the thing to watch at that time is, are credit spreads starting to widen out? Are there growth fears starting to bubble up? Because if credit starts to deteriorate in a more meaningful way, that's where you would potentially see a cross below the 200-day. But our base case is 200-day is viable.
What was that 57 number?
5,700-ish.
5,700. Folks, on the Bloomberg, you look at 2 standard, as a general rule back to Maggie in World War II, you look at a weekly chart. The media doesn't do that much. Cam Dawson does that each and every moment of her day. The 2 standard deviation decline, Paul, on the SPX is 5,755. Okay. Within a little bit of a Cam Dawson statistic. That's how you use all this fun and games on the terminal.
Cam, what did you make of the earnings? We're pretty much done with the S&P 500 reporting their fourth quarter numbers. What did you take away from the earnings?
Well, what we took away is that, yes, earnings came in better than expected. You went in to the season expecting 12%. You got 17. Great. But we've also seen estimates get cut for 2025. So all the good things that happened in the fourth quarter of 24, surprising to the upside, is getting taken out of 2025 estimates as analysts recalibrate to the economic reality. Potentially there's some uncertainty being priced into that. So yes, we got those better earnings, but you're starting to see that forward earnings estimate level off, which is why we think returns are leveling off.
Sweeney monopolizing the YouTube live chat, Cam. It's like you and I don't exist. Carson's out there going Sweeney in drawdown, being associated with us kids in the market is so true. What are hedge funds doing? They're the slaves to drawdown from the peak down to wherever you are, maximum drawdown. What do you observe fancy people on Wall Street doing?
Well, we went into this year with institutional positioning in the 95th percentile. So one of the reasons why we were a little bit more skeptical about big upside is just that people were already fully invested. So it wouldn't be surprising to us that we start to see that positioning in the next click of it when we get an update have come down quite a bit as people react to higher volatility, less upside returns. But positioning was so one-sided, so it's really not surprising to see this fall.
When you talk to your New Edge wealth clients, do they want to buy this dip here, or is something a little bit different this time?
We don't think it's really that different this time. We see investors becoming a little bit more concerned about the potential for a whoops moment where the market is so very confident that everything is awesome, that you're only going to get great policy, that you get caught flat-footed. But we think that if you look at the numbers, once you get a 10% drawdown, your probability of forward returns being higher simply goes up. And so even if that's not the ultimate low, it's still a great opportunity to at least put some cash to work.
What do you think? I watched this the other day. Paul said to me, you got to watch the NVIDIA earnings. So, I got up from the surveillance nap, tuned into Tim and Carol. I had a beverage in my hand.
Yeah, that's how you
do it.
And
I watched this insanity out there of traders, some of them very snarky, making jokes that they had $148 invested. But how do our listeners and viewers who don't have, like Lisa's kids, a laptop on the couch trading NVIDIA, speed trading it off of its results? How do we respond to that?
We respond by realizing that second derivatives matter. The fact that you saw the peak growth rate for NVIDIA earnings back in the summer of last year, and that's when the stock effectively peaked. We've been flat for the last 8 months. Given the fact that, yes, you're still growing earnings by 80%, but 80% is less than 120, which is less than 200, and that's why the stock is flatlined.
Oh, she's awesome. I mean, it's like calculus with Cam here.
Yep, exactly.
Second derivative, and the key word she said there is rate. She's not looking at NVIDIA's price or its revenues. She's looking at the growth rate of said, in this case, revenues. And it's come off, and that's a second. We'll do physics here in the next hour. It's too early.
Hey, Cam, what screens well for you and your team these days? Is there a certain industry that screens well? Is there a factor that screens well? What are you guys focusing on?
We still are focusing on the quality factor. If we look at our three big large cap equity portfolios, growth, value, and international, we are still finding names that are trading below their indices average multiple that have been left out from the big rallies that we've seen within just the tech names. And we think that selectivity is incredibly important. It's just sometimes it takes time to materialize. We were looking and buying things like Alibaba when it was trading at 9 times earnings, and you see these huge moves as valuations get repriced. The opposite is true, though. If you have these very high valuations, momentum stocks, when you get a little bit less good news, that's why you're seeing such rapid unwinds.
It's interesting just looking at Alibaba. It has had a great run off of the bottom here, but now it's kind of getting caught up in some of these trade issues. I mean, so that's something that investors have to be wary of. I mean, the trade talks and just the noise coming out of Washington, it does impact securities.
Yeah, we're definitely living in a world of policy roulette, and we see it weighing on soft data. We see it weighing on sentiment. Look at the difference between the Dallas Fed Manufacturing Survey right after the election to today. It's starkly much more bearish about the outlook for the economy because of the degree of uncertainty. Does that translate to lower hiring, lower investment? That's the big question that we'll have to watch in the data in the coming weeks.
Let me know if we get a death cross or a golden cross. Yeah. I'm with Barry, frankly. I think
I love that
it's
stuff.
just bad math.
Yeah.
I won't bore people with what I use on moving averages. They'll all nod off and go to sleep. Cam Dawson, thank you so much with New Edge there, with some optimism on quality and moving forward. We got drawdown into the conversation 3 times.
I know. Very good.
You're killing. In the next hour, we'll mention Sharpe ratio 3 times. Very good. Futures up 13. Dawson driving the market higher. Futures up 13. Dow futures up 176. I'm looking here at the VIX. Shows attention, seriously, folks. Where were we? 17 through 20, and right now 21.08 on the VIX. So I'm going to say it's like a Friday of fragility. Why would that be? Because in 45 minutes, make it even 40 minutes, we get key inflation data. We'll bring that to you. Michael McKee will interpret. Got Frances Donald with us as well with her wonderful analysis of American macroeconomics. The Sweeney yield, 4.04%.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Take a look at the front pages of the Lisa Mateo report. It's brought to you by IBKR. Will the average U.S. temperature in February 2025, will it exceed 36 degrees Fahrenheit? At IBKR Forecast Trader, the yes was recently at 44%. What's your take? Trade your prediction. Do that at ibkr.com/forecast. You're not mentioning Taylor and Travis, are you?
No, we're not.
Okay,
we're not.
good.
Definitely staying away from that. What we are talking about is, of course, AI. We always talk about it, but people are finding new ways to use it. That includes cheating on job interviews. So the way they're doing it, they're using these generative AI tools like coding assistants, teleprompter apps that feed them live answers when they're doing video interviews. So Business Insider is saying Amazon, they want to put a stop to it because they're seeing more of it. So they changed their guidelines in their job applications so you can be disqualified if you use any of these things. The question is, how do you know if someone's using it?
Yeah.
So Amazon actually put out some guidelines. So, for example, those watching on YouTube, if I'm doing the job interview here, I'm usually looking, and if you ask me a question, I'll be typing, because you're typing in the question, so what AI will respond. So if you see someone typing, that's a red flag. And then if you see someone, answering your question, but they're kind of like looking like they're reading, like this, if you're on YouTube, that's another red flag. So what they're doing is they're trying to cut back on this because more and more people, and it's not just Amazon is saying it, other companies are saying that people are doing this. They're cheating on these
and they're doing it with the
interviews.
resumes too. There's certain, we had a story on Bloomberg yesterday. There's certain keywords that people are focusing on that, you see it on somebody's resume and you can tell that resume was created by ChatGPT.
Yes.
I'm getting the buzz that for college applications it's death. Ooh. They can tell in a heartbeat.
I'm sure. The college essays.
I don't know anything about it other than good luck with that.
Yep.
Next, what do you got?
Okay, this was interesting.
But she's reading from the screen.
Oh, I know.
You can tell that.
This is interesting. The erosion that's eating away at those homes in Nantucket, so it gets into a deeper look into it. Some of the pictures are amazing if you look at this article. But they say emergency crews, they're scrambling. They basically use these steel beams. They put them under the homes. They jack them up and they roll them back about a few hundred feet back. But it's happening more often. Since 2023, houses on the street is called Sheep Pond Road. They've been condemned, demolished. Some are moving back, and some they just have to sell for pennies on the dollar. So they're losing out. But here's what the residents are saying, and Paul, this goes to you in the Jersey Shore because Nantucket doesn't have those jetties and those sand replenishment projects like the Jersey Shore. I mean, I remember sitting on the beach in the Jersey Shore and seeing those ships come in, and I was like, what are they doing?
They're out there right now as we speak.
Yeah, and that's what they're doing. But they're saying Nantucket doesn't have that.
They're out in the middle of nowhere where the erosion has been there for years, and I don't pretend to be an expert on it, but I'm looking at right here now on Chester Street in Nantucket. Lee Real Estate has it, and it's a nice little small bungalow on the street, distant from the water. It's like you could shoot a movie in front of it. Are you ready? $3.8 million, and it's 3-bedroom-ish.
Yeah. Well, the problem a lot of those people bought during their pandemic,
Excuse me, 4
and now
bedrooms.
Yeah.
their value is going down because they're going to be falling into the water possibly.
3.8 million
crazy.
for a little.
Tom, if you're going to buy a home on Nantucket or Cape Cod, my personal strategy is you have to also be able to have it fractional ownership in a plane. If you can't do that, then don't buy it. Because if you're not flying up there easily, you can't drive it.
Yeah.
It's a disaster.
Okay. What else do you have?
Last one. This big mistake by Citigroup. It's actually coming to light now. The Financial Times has it. They credited a client's account with $81 trillion. It was meant to send only $280.
Oh, yeah, I saw that. Yeah. Oops.
It happened last April. Never reported because it was like a near miss. But the Financial Times looked into it. It said it was missed by a payments employee, missed by a second official. A third banker finally found it. The payment was reversed several hours later, so that is good news. No funds left the bank. But it just shows that, they're going after this.
As a former bank teller,
it happens.
If I had a $3,000 miss at the end of the day, I could find that in 5 minutes. If I had a $23.87 miss, could never find it, and they would take it out of your paycheck.
81 trillion.
I know. The round numbers you can find easy.
And they took it out of the paycheck. My sister went through this.
Exactly.
Really?
Thank you. The newspapers with Lisa Mateo. Greatly appreciate that. Travis, another year. Nathan Hager said, you got to play Taylor.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. An important hour for the nation and for global Wall Street inflation in 30 minutes here. We start strong. Michael Dutta will join us with Roth Capital. Neil Dutta, more cautious on the economy now than I've ever seen him. Ian Lyngen will join us from BMO Capital Markets on rates with his authoritative note. And we finish even stronger with Francis Donald of RBC. And McKee comes on as the afterthought.
Cleanup hitter.
It's a solid hour.
Solid economist. marginal revenue, marginal cost.
It's great. The interns are just killing it. There's no other way to put it. Futures up 14 right now. The VIX shows a tension as we go 29 minutes away to that inflation report. The VIX 21.06. We're going to get right to it so we can get to Michael Dutta from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
Yeah, we've got NASDAQ futures just battling to stay in the green this morning. And this is as NVIDIA shares, they start to tick back lower again. The shares were higher at the top of last hour. Now they're down about 1%, and this is after falling 8.5% yesterday. So NASDAQ futures basically unchanged, up about 10 points. Dow futures up about 0.3%, 173 points, and S&P futures up 0.2% or 14 points. The 2-year yield 4.05%. That's little change, and the yield on the 10-year 4.26%, and that is little changed. We take a global look, a little bit different. Stocks in Asia taking a hit this morning. The Hang Seng down more than 3%. That's affecting U.S. listed Chinese stocks. We have Alibaba down 4%, Baidu down 2%, and PDD off about 3%. Stocks in Europe mostly slipping. We have the UK's FTSE right now, the exception up about 0.3%. The Bloomberg Dollar Spot Index, that is little change, and Bitcoin really taking a hit, down more than 4% at just above 80,000. Investors kind of rushing to safe assets after President Trump's latest tariff threats. So you have crypto-related stocks like Coinbase down 4%, Riot Platforms down about 3%, and MicroStrategy, that's that software company that really put the house on Bitcoin, having a tough time, down 6% this morning.
Riot Platforms?
Riot Platforms, another crypto stock.
Another Dow component.
That is your Bloomberg Business Flash.
I've been remiss. The Sweeney yield did not get to 3.99%, but to me, that's a real benchmark.
We're close. We're at 4.01 was earlier this trading session. We're at 4.05%. That's a nice level.
I never look at it. Michael Purvis, good morning at Talbot, and I looked at the 2-year inflation-adjusted yield, and I'm sorry, it's a moonshot lower.
Is it? Okay.
It's really moving much more, as you'd expect, than the 10-year yield. This is a joy. Michael Dutta joins us right now with Roth Capital. Scott's somewhere south of Georgia, but far more, Michael Dutta is surveillance erosion correspondent, looking at the islands off the Commonwealth of Massachusetts. Dutta knows, and this is near Chappaquiddick on Martha's Sheep Pond Road. I mean, if you have a house listed for $2.3 million 2 cups of coffee ago, but you sold it for $600,000 because it may not be there in 6 months. Michael Dutta, your experience enjoying the islands of the Commonwealth, I mean, this erosion thing has always been there, right?
Oh, yeah, it's always been there, Tom. And as you mentioned, we've had a huge real estate boom post-COVID. Things are, definitely moderating now around the country. You saw the housing statistics this week were pretty sloppy. But, if you're talking about desirable areas that have environmental risk and have always had those risks, certainly that, that comes into consideration as well.
In your experience, one more question on this before we get to the serious news at hand. Michael Dutta, in your experience, can any fat cat ever staunch the erosion? I mean, do you put boulders in the water or build a cliff wall? I mean, is there any experience of that happening? I've never seen it.
I can't answer that directly. I could tell you from our personal perspective, we took those risks into consideration when we were thinking about investing in a property in Martha's Vineyard. And, we're out in the Aquinnah area, and one side is receding massively, and we steered very clear of that. The other side is actually accreting. So I think you have to do your research, Tom, is the bottom line.
The dogs are okay. That's all our listeners want to know.
Absolutely.
Okay, what are we going to see here in terms of 25 minutes from now, this inflation report? What will it do to the scope and scale that Jerome Powell has to study?
Well, look, Tom, I mean, just based on the releases that we already received from the CPI and the PPI index, economists that focus on trying to nail these numbers think that they're going to be a little bit on the core PCE deflator. I think that is really the key metric to watch. So expected to be up 0.3 or just below that on an unrounded basis. After a pretty good streak, 6 out of 8 months, we were running 2% annualized inflation or less. So I think a lot of progress has been made, but the Fed is really concerned now about the supply side shocks hitting from tariffs, stricter immigration policies, and lower labor force growth. And so they're very hesitant, obviously, about continuing on a rate cutting path. And you can see these fears in the marketplace too. I think you were talking about the short-term real yield. So, you have investors going long inflation protection, and the real yields could be dropping because of weaker growth expectations. But if you look at the break-even spreads, the inflation compensation at short horizons, the long-term inflation expectations remain, fairly well anchored. But 2-year tip spread up above 300 basis points. The markets are getting these shocks that hurt real growth, temporarily push up inflation. And the Fed is going to have a hard time looking through those shocks if it feels like inflation expectations are maybe de-anchoring a little bit. And that's a big potential problem for the committee going forward.
Michael, investors are trying to factor in tariffs and what they may mean for inflation and whether we even get the tariffs or are they simply a negotiating tool for President Trump. What's the timing typically from tariffs being implemented to maybe showing up in some of the inflation data?
Yeah, well, I mean, I think it's showing up in risk markets and auction markets instantaneously.
Okay.
And then, there'll be probably a multi-month lag in terms of implementation and vis-a-vis showing up in, wholesale or producer prices. And, this could also be something that, even if it takes a few months to fully show up, I mean, boy, we have equity market valuations pulling back from exceptionally high levels, a theme that we've addressed when I've been on your show repeatedly now. And, at some point, I think investors realize the expectations are high, the valuations are high. And now with a potential tariff wall being erected, does that, it's either going to threaten inflation or it's going to threaten corporate profit margins, probably a combination of both. And if you've got equity markets priced at absolute perfection, that could create a corrective undertone here that I think few are prepared for.
Michael Dutta, Roth Capital, with us right now, of course, with good perspective and extended conversation. Ian Lyngen coming up with Neil Dutta and Francis Donald as we look at inflation, key inflation data here in 20 minutes. Michael Dutta, have you framed out forward a real GDP statistic, or is there so much uncertainty you can't figure out if it's 2.x or 1.x?
Yeah, there's a lot of uncertainty, Tom. I mean, I think we're probably, going to be in the low twos for Q1. And then I think there are downside risks from there. These adverse supply shocks will weaken real growth and temporarily push inflation higher. And if the Fed does not have the willingness or the ability to look through those shocks because it's worried about inflation expectations, you could get a compounding effect. And so I think, low twos with downside risk from there. I will submit, it looks like we have yield curves reinverting on us. Now, we got away with a long, deep inversion and no recession the first time. But, how many times are we going to see this movie before, the conclusion is that the economy goes into a downturn? So reinversion of the yield curve, economic surprises rolling over. That's the main reason bond yields have
Paul Sweeney, gold under
been
20.
rising, falling rather, against expectation coming into the year. So I think, am I with you still?
Yeah, we're having trouble here right now. I'm gonna let Bob or Cy work on that. Let's try to reconnect with Michael Dutta, see what you can do there as well. Paul, I was going to say before we had the transmission issues with Michael Dutta, gold under 2,900. Remember, like 2 cups of Sank ago, we were on a 3,000 watch.
Yeah, and you remember the Goldman Sachs a couple of weeks ago, Tom came out with that 3,100 call. So, but commodities pulling back a little bit. WTI crude oil below 70. Tom, we're now at $69.50.
Michael Dutta with us, Roth Capital. Paul?
Hey, Michael, talk to us about the consumer here. I mean, no matter what this economy has thrown at this consumer over the last 4 or 5 years, the consumer hangs in there. You look at retail sales and you just listen to what companies are saying on their conference call. But boy, if you get another round of inflation, how would you think the consumer would react to that?
Well, it's certainly not a positive, because even if we're talking about potential inflationary shocks that are temporary due to supply side distortions, that obviously hurts real incomes, and it also causes the Fed to hesitate in terms of supporting the economy.
Right.
So it could be a compounding influence with, to Tom's earlier question, downside risks to, growth being in the low twos in Q1 and potentially downside risks from there. And, I'm watching this economic surprise index roll over pretty hard. And that's been associated with this unexpected, I put in quotation marks, bond market rally. Maybe we were one of the few bullish on the 10-year Treasury when it was 4.8 in January. Now we're down to 4.4 and change. So that's really a hallmark of economic data coming in soft.
And now, folks, to finish up, we go with classic Dutta here. Michael Dutta, if we have nominal GDP and we strap partial differentials across real GDP and inflation, do corporations adapt to it? If we get a true stagflation of a lesser real GDP and a trend towards a higher or sticky inflation, do you have an optimism that corporations can adapt to that?
Oh, sure, Tom. I mean, I think over any extended period of time, corporations will adjust. I think they can be flexible. But the question is, what does that mean for the business cycle in risk markets? Because if the adjustment is that we see a pickup in layoffs, which seem to be happening, you could end up with some economic dislocations here in that transition that are associated with a fairly significant equity market correction. Now, to Paul's question, the consumer's held in there. Why? A lot of the consumer spending is driven by high-income households that have been riding high on this huge stock market rally, which is now flickering and flagging in a labor market that has, come in and blown expectations. off the wall in terms of being, strong and sustainably robust payroll growth. And that could also be under threat now. So yes, the corporations will adjust, but the question is, what does that mean for risk markets in the business cycle in the interim?
Michael, talk to us about this Federal Reserve here, because we're going to get, starting today, some serious economic data over the next, couple of weeks here. And how do you think the Fed is thinking about their policy these days? Because like everybody else, they have to deal with all the noise coming out of Washington, D.C. and the news flow.
Yeah, Paul, good question. I mean, I think we can tell by, recent commentary that they're pretty concerned about these supply side shocks coming at us. And if you go back to that 2018 research, I think Anna Wong of Bloomberg pointed this out initially, which was a great find, where the board, the staff at the Federal Reserve did a research study about, what happens with like a 15% across the board tariff in different economic scenarios. The scenario in which the Fed can't look through or see through the supply side shock or would tighten policy, you get a recession. So the appropriate path was to look through a shock like that. But the crucial caveat is that that's only available if inflation expectations are anchored. And the Fed is getting nervous about some of these inflation surveys and probably the short end of the tips curve. I'm not super nervous about that in terms of a persistent inflationary shock, but if it causes the Fed to really hesitate here, that could be a problem for these equity market valuations, as we're seeing.
Michael Dutta, thanks so much for getting us up to this key inflation report. Particular thanks, Michael Dutta, for comments there on what I'm going to call the islands of the Commonwealth. Good morning. 92.9 FM in the whole New England area. I say from somebody said, really? From Mount Katahdin down to Block Island?
It's a big signal.
And I said, yeah, it's a big signal.
It's a big signal.
It's like KMOX out in St. Louis. Michael Barr I used to listen to. But, I mean, come on, you buy a house and 7 years later you're looking at the beach and it's 2 feet away from the living room.
That's a real deal. I mean, again, the Jersey Shore, the big trawlers are out there digging up the sand and they bring it on and they shoot it on the shore, and they've been doing that for decades. And
do they do the big boulders on the Jersey Shore?
We have the jetties. We have the jetties. Yep. We got the big jetties in the works. So our beaches are the best shape they've ever been in my lifetime.
You can get the Boston Whaler when you come out of God's basement.
That's right. Exactly right.
Yeah. We'll have to see.
How we
Futures
roll.
up 13, red and green on the screen right now, and that VIX elevated 21.14. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Ukrainian President Volodymyr Zelenskiy is visiting the White House today to persuade President Donald Trump not to sacrifice Kyiv's interests in a peace deal with Russia. Trump has refused to commit to providing U.S. military support to ensure Russia abides by any peace deal. Zelensky hopes to use a minerals agreement with the U.S. for broader discussions about U.S. security guarantees for Ukraine. Zelensky and Trump will hold a 1 p.m. Eastern Time news conference, and Bloomberg will carry it live. President Trump met with UK Prime Minister Keir Starmer yesterday at the White House. Among the topics the two leaders discussed include the threat of tariffs. During a joint news conference, President Trump was asked if he shares American consumers' concerns that tariffs will increase prices.
I find that it's not about inflation, it's about fairness, and the inflation for us has not existed, and I don't think it's going to exist.
Hollywood rolls out the red carpet for the 97th Academy Awards this Sunday night, but the glitz and glamour could be tempered in the aftermath of last month's deadly wildfires in Los Angeles. Bloomberg's Mark Perrier has more.
The organizers, I think, have to strike the right balance, being respectful of the moment, but also providing the audience with the glitz and entertainment that we always expect. They have indicated that there will be, they'll have firefighters involved, or at least they'll salute them on stage.
Bloomberg's Mark Perrier. As for the awards, Honora, Conclave, and The Brutalist enter the home stretch as the favorites to win Best Picture. Demi Moore is the frontrunner for Best Actress for her portrayal of a fading celebrity in the sci-fi horror film The Substance. Global news 24 hours a day, and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I had no idea how long Travis Kelce has played.
13 seasons.
I had no idea. I thought he was like 6-7 years into the madness. And they say clearly here he is slowing. dumb question. Tom Seaver personified pitcher longevity by changing his game, et cetera, and many other pitchers. Can a tight end change their game?
I don't think you can, because when you're playing football, I mean, you're talking impact after impact after impact. When you're talking about a pitcher, I mean, yeah, you can change the mechanics of how you throw the ball, but in football, it's go, 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 and you keep getting pounded. Yeah.
I mean, what did Strahan do for the Giants?
Well, let's go to the money here, Tom. Travis Kelce, over his career, $93.9 million in total salary.
That's what she makes in one concert.
And he's, for 24-25, he's got a 2-year contract for $34.2 million, all guaranteed. How about that? Total guaranteed, $17 million guaranteed. So there you go. He's making plenty of money. That's why he's going to come back.
And they can't say no. I mean, they
of
can't,
course not. Why not?
But
he's the real deal. He's great. The next great tight end is going to be the kid from Penn State's going to get drafted this year. He's going to be the next great tight end.
What's his name?
Can't think of the name. Carson, something like that. I'll have to ask Dan Ives. He'll
it's
know.
Right.
Yeah.
Ari's on top of that. Well, okay.
I'm already interested in the combine already. I want to see what are we going to get coming into the league.
Tyler Warren is his name from Penn State. The next great tight end in the NFL.
And I agree with you, Michael Barr. You can't adapt and adjust in that league. I mean, you got to be on your game.
Oh, yeah. I mean, you got to be 100% on as much as your body is going to give. And eventually, your body is going to deteriorate.
Right. What do the Lions need to avoid the arch embarrassment that we witnessed at the end of last season?
Well, again, it comes back, and don't get me wrong, I love Jared Goff, but he picked the worst time to have one of the worst games. 5 turnovers. You're not going to win a game at doing that.
Is this sports radio in Detroit? What are we doing?
Yes, exactly.
I'm sorry. I mean, I love Jared Goff. Don't get me wrong. I'm just saying.
Okay. Thank you, Big Bar Sports, for that. Futures up 10. They deteriorate. Running green on the screen right now. Paul, what are you looking at on the screen? You got to be looking at the Sweeney yield.
I'm looking at Sweeney. I'm looking at Bitcoin. I'm sitting on it. $80,000 is kind of sitting right there. We're down another 4% on Bitcoin. Yeah. So 80,800 is where we are right now. I don't know if there's 80,000 is a magical support number. I don't know. But boy, it's been a 25% drawdown really in the last 6 weeks. That gets your attention now.
It's just so drawdown.
Exactly. That's how we roll. So for the people out there that are trading this thing, it's a little tight.
I wonder what Emily Graffeo would say if it pops down through 77. Yep. I mean, what are you doing?
And what are the Balchunas ETF people doing? Are they buying
the ETF, this is a no-brainer. Buy Bitcoin. It's perfect in your retirement plan.
Oh, boy.
Yeah. Did you and I see this company? I think we did.
Yeah, I think we did.
We'll come back on this. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got futures mixed on the screen here. This is ahead of more inflation data. We are minutes away from the PCE price index. We'll also get data on personal income and spending. So ahead of it, NASDAQ futures. Little change, down about 17 points. Dow futures up 0.4 0.2%, 186 points. S&P futures up 0.1% or 9 points. The 2-year yield, 4.04%. That's little change. And the yield on the 10-year, 4.25%. And that is little change. Bitcoin fell as much as 7.1% this morning to the lowest since early November. Right now, it's down 4% at just over 80,000. The Bloomberg Dollar Spot Index up about 0.1%. To earnings we go. We'll start with shares of Dell. They're down about 6%. Its sales outlook for AI servers, well, it didn't quite alleviate those concerns about profitability. We go to HP, down more than 3% after its outlook missed. And then we also find shares of Walgreens. They're down 3%. We're watching them because they had a downgrade from Deutsche Bank to sell from hold. It also says reports of a possible take-private deal from Sycamore Partners. Well, that could be tough. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. Good morning on your commute across the nation on YouTube. Go to Bloomberg Podcasts on YouTube. We are humbled by the growth that we see out there. Victoria Fernandez, Jordan Rochester, Michael McKee, Francis Donald, and Lyngen. We go into this inflation report strong with Neil Dutta of Renaissance Macro. Neil, you're more cautious now on real GDP, on the growth of the nation. Are we approaching stagflation?
No, I think we're approaching stagnation. I'm not really a big believer in the stagflation story, because if labor markets are cooling, that will continue to put downward pressure on wages, which will take pressure off of inflation. There's not really much to like right now about the economy, Tom.
So flesh that out, Neil. I mean, just, 15 minutes ago, everybody said this U.S. has U.S. exceptionalism. What's changed?
Well, I mean, I kind of I'm applying the same framework that I used, back when Tom was calling me the Economist of the Year.
That's a weak moment.
It's basically a function of four things: incomes, housing, government, and just the way the consensus is positioned. Incomes, right. Real incomes are slowing because the labor markets are cooling. The housing market is getting worse despite rate cuts. Back in late 2022, it was getting better despite rate hikes. People are talking a lot about DOGE and what's going on in DC, but the truth is that state and local governments have been poised to scale back for quite some time now in the upcoming fiscal year. And just look at the way the consensus is positioned. I mean, the consensus was perpetually expecting recession back in late 2022, all the way to the middle of 23. And now everyone seems to be resigned to the fact that growth is going to be at 2.5%. So there's more room for the consensus to be surprised to the downside. And if that's the case, there's more opportunity for things like employment, inventories, investment to clear out.
On Bloomberg Radio nationwide, as we're now 2 minutes, 30 seconds away, you're missing on radio, folks, our YouTube countdown clock. Oh boy. It's like F1, it's a Rolex. It's a Swiss chronometer with Neil Dutta here as we go towards the inflation report. Does the inflation statistics, the fancy ones, Neil, do they make sense statistically now? Dallas, Tremine, the different flavors of Cleveland inflation. Are the statistics that pros use now
Are you trying to bait me into a debate with my former boss, Tom?
Yes, that would be true. How did you know that?
I mean, I just assumed. I mean, he's been harping about that, for the last several months, even when he was fighting me on whether the Fed would go 50 in September. At any rate, I think that there's a upward bias to a lot of those indicators. I mean, could you imagine focusing on the trim mean indicator back in 2008 when it was running substantially higher than traditional core inflation?
I agree.
It's important to just have a fundamental framework for how inflation works. Compensation growth equals inflation plus productivity. If productivity is running about 1.5% and compensation growth is running, around 3.5%, you're right in the strike zone for the Fed's inflation objective. So I don't put much stock in those measures. I think the fundamentals suggest weaker inflation.
What you just heard there, folks, is gospel. And if you want to read on it, I haven't done this out on social yet. Matthew Slaughter of Tuck at Dartmouth and the wonderful David Wessel of the Wall Street Journal and Brookings now, with his leadership at Brookings, have put out a required read essay on what Mr. Dutta talks about, which is the productivity of the nation. It is the essay to throw at your smart aleck kid trying to tell you Dallas trim mean as a chi-squared wrapped around, whatever the statistical ballet is. We'll talk much more about that with Neil Dutta in the coming months. He's going to stay with us here as we go to the PCE inflation. Here's Lisa.
This is breaking news from Bloomberg.
All right, so we got about 10 data points to get to in this hour as they start to come in. Where we want to start to first, we'll go to the PCE price index. This is year over year. So for January, the expectation was for 2.5, came in right on target at 2.5. We go to core PCE price index year over year for January was 2.6%, came in right on target at 2.6%. I want to take you over to personal income for January. The survey expectation was for 0.4%, came in a tick higher, 0.9%. Personal spending for January. The survey was for 0.2%, came in down, off 0.2%. So that's a difference there. Want to see the markets and the reaction. Not much. We still have NASDAQ futures still teetering right now, up about 0.1%, 22 points. We have S&P futures up about 0.3%, 17 points. Dow futures up about 0.5%. We go over to the yield space. The 2-year yield, 4.48%. That's little change. And the yield on the 10-year, 4.25%. And that is little change. Tom.
Lisa, thanks so much. Turn to the market. All the inflation numbers pretty much on the survey, but I really want to focus out on real personal spending declined way off survey and personal income with a nice lift as well. I got retail inventories, which I don't understand. We're going to skip that. We're with Neil Dutta here. I got a little bit of an equity lift. I went right to the 10-year real yield. Came in a little bit, but it comes right back. Neil Dutta, am I right that this was a nothing burger?
I mean, real personal consumption fell quite a bit to start the quarter. That's probably going to put downward pressure on tracking estimates of first quarter GDP, and will probably prompt some marking to market of forecasts among the consensus. So I don't.
Right.
Is it a nothing burger? I mean, I think the inflation numbers came in line with expectations, but real GDP is probably getting worse. Not.
This is critical, folks, with real spending. I mean, what we see on the ECO screen of the Bloomberg, real personal spending came in light. Personal spending itself came in light. A little bit of a constructive revision. But, Neil, it's unfair to ask this, but it's unfair Friday. I mean, can you model out sub 2% GDP looking at 2 quarters of data to the 4th of July?
Yes, I think that's possible. I mean, look, most of the upside surprise in GDP growth last year was in 2 areas, consumption and government spending and investment. That's what drove most of the growth. So if you think those 2 areas are going to slow, it doesn't really take much. At the same time, you layer on the fact that residential construction is likely to get worse, not better. I mean, export activity was a big driver for growth last year. I mean, if this trade stuff keeps up, I mean, there may be some risk to exports as well. So I don't think it's that much of a stretch. I mean, you're talking about a 0.5% monthly contraction in real consumer spending. I mean, these tracking estimates might be at 1% for the quarter after today.
Yeah, that's kind of where I wanted to go, Neil, because this amateur economist here, that's the number that kind of jumps out at me, and I'll just highlight it for the audience. Real personal spending, the consensus was for a decline of 0.1%, came in at a decline of 0.5%, so missed there. And you compare it to last period where it was revised higher to positive 0.5%. So a big delta there. I do know that, you economists tell me that the consumer is 70% of the economy. So that really does get your attention. Is that a number that moves around a lot?
Well, I mean, consumer spending tends to be, more stable. I mean, a lot of acyclical areas of consumption, right? I mean, so people have to go out and kind of spend. But ultimately, generally speaking, consumption follows income growth. And what you can basically say is that in January, I mean, there was an increase in precautionary saving. Maybe, I mean, that's basically what it is.
Right.
That income grows. But again, that goes totally against what people are sort of worried about right now, which is inflation expectations, right? I mean, that's allegedly the reason why the Fed is holding off. Everyone's pointing to you, Mish. Now, guys, think about what inflation expectations should mean. It should mean, number one, people are going to bid up their wages because we know that wage growth is set with short-run inflation expectations in mind. I mean, I don't know. Good luck to any worker that's going to try that right now. I mean, you're in for a rude awakening. But more importantly, it's you try to spend more to beat the higher prices later. There's no evidence that that's happening. You're seeing precautionary saving, not precautionary spending. So this notion that inflation expectations are rising and this is why the Fed needs to hold off.
Ian,
Sorry, don't buy it.
Neil, I want to get one more question in here. I think it's so important. Ian Lyngen's being patient to wait for us. Neil Dutta, is there a wealth effect of the fancy people in the personal income, personal spending? Do you see the stock market? Do you see the way Paul Sweeney made money on NVIDIA? Is that in those statistics this morning?
Well, I mean, there was a great article from the Wall Street Journal about a week ago, I believe, about just talking about how consumption is being driven increasingly by the high end. And so, you know, obviously it's affected by what's going on with asset prices. But what I know about asset prices is that, you know, stocks are not making new highs. They haven't been. Number two, you know, a lot of these sort of alternative assets like crypto have come under pressure. And more importantly for everyone else, home prices are moderating because inventories are jumping. So, you know, to the extent that the wealth effect was an important driver of consumer spending, that's looking a little bit shaky now as well.
Neil, thank you so much. Neil Dutta with Renmac, just brilliant there as we looked at PCE and as Paul Sweeney mentioned, real consumer spending, real personal spending with a shock, a little bit negative, maybe new GDP markdowns. And we'll get to the bond market in a moment here with Ian Lyngen. Our economic indicators, what we do each and every day, but particularly on these important key days. It's brought to you by IBKR with a year-over-year change in the U.S. business inflation. U.S. PPI, will it exceed 3% in February of 2025? At IBKR Forecast Trader, the yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. We welcome all of you on YouTube nationwide. Again, go to YouTube, Bloomberg Podcast, subscribe there. Growing each and every day, 7 days a week, grows on a weekend.
Sure, yeah.
Is well. Joining us now, BMO Capital Markets, Ian Lyngen. Ian, I'm looking at lower yields. Neil Dutta has given me lower GDP. Do we finally have in place the vaunted Lyngen vector where we get shockingly lower trends in yield?
Well, I do think that we're overdue for a continued drift lower in rates. I wouldn't be very surprised to see the current move get 10-year yields a lot closer to 4%.
So
that gets your attention.
That gets your attention. So how do you think the Fed, Ian, is going to look at some of this data today as they try to get a gauge on their balance between the labor market and prices?
Well, I think that core PCE was in line with expectations. I think that to a large extent, the inflation profile is known. What's unknown is what's going on in Washington. How does that lead through to sentiment in the employment market? And that jobless claims figures from yesterday were a bit troubling. We're at 242. It's the highest since early December.
So again, that kind of suggests that it feels like the Federal Reserve's just like the rest of us. They're just kind of looking down to Washington, D.C., trying to stay on top of all the news flow coming out here. How long can they sit on the sidelines, do you think, Ian?
Well, I think that the Fed can avoid cutting rates again, at least through the first two quarters. I think it's very reasonable to assume that they skip the next few meetings. The first rate cut maybe comes in September, but there's a lot of uncertainty between now and then. The only way that things are going to shift dramatically is if we see a further correction in the equity market that tightens financial conditions or an increase in the unemployment rate, both of which are possible.
We're going to have to do an audible here. We're going to come back to interest rates with Ian Lyngen. Ian, Canada just reported a whole series of economic data, and I'm sorry, it's positive, including, I think I see here, third quarter GDP was revised from a gloomy 1% up to 2.2% is well. You've got the Bank of Montreal Combine working for you. How do you filter in the response of Ontario, Quebec, Alberta? How do you, when you see their response to proposed tariffs from 1600 Pennsylvania Avenue. What does that do to America? What does that do to our GDP? And then on to your 4%, 4.0% 10-year yield.
Well, we do know that the Canadian economy is a lot more rate sensitive, and the Bank of Canada has been quite a bit more aggressive on the rate cutting side. So seeing the Canadian economy respond positively isn't that surprising. What I worry about, and I think that most Canadian banks do, is what happens with this looming 25% on the 4th of March. Does that really derail growth in Canada? The short answer would be probably we probably see a material hit, which should translate through to lower rates, and the U.S. probably gets a bit of a downdraft as well. So I think that there's a lot of cross currents brewing in favor of lower yields in the near term.
So what does Bank of Montreal say about Doug Ford of Ontario and what he's going to do in Windsor, Canada to put X tens of thousands of Americans out of work? How does Bank of Montreal see that sequence if we get it?
Well, I think that the short answer is we're all in the position where there are a lot of political uncertainties, and the back and forth between leaders, whether it's coming from Trump, whether it's coming out of China, whether it's coming from Canada or Mexico, will continue to fuel this uncertainty.
So how do you think this, I guess coming back to the U.S. here, we had the real personal spending came in materially weaker than expected there. How does the Fed look at that kind of data?
Well, I think the first thing the Fed would say is the consumer remains on strong footing. Take a look at the longer term trends, and there's no real reason to start worrying about the consumer yet. It's one data point. Yep. I'm looking at that and I'm saying, okay, this is not going in the right direction. If Q1 ends up with a 1% annualized growth rate, that will matter to the Fed, because that is the type of economic slowing in an environment where we might see higher inflation in the medium term or near to medium term. And that's a recipe for stagflation. And that's got to be a concern for the Fed.
On your commute across the nation, good morning to those of you in Canada waking up as well. From the Maritimes out to British Columbia, we say good morning. It's Bloomberg Surveillance with all of our digital efforts on radio, including Apple CarPlay, Android Audio, and the shock of Sirius, how well that's doing for us. Good morning on YouTube. Subscribe to Bloomberg Podcast, humbled by the audience today. Thank you so much for tuning in. Ian Lyngen with us now of BMO Capital Markets.
Ian, we're looking at a 10-year U.S. Treasury right around, 4.25% right here. And I guess you could say it's still kind of within a range we've seen for a while here. But where do you think we end up the year on the U.S. 10-year Treasury?
Well, when the Fed is on hold, like we expect them to be for the next couple quarters, that tends to translate into a range of about 110 basis points for 10s. And so I think that by the end of this year, we'll be back towards the bottom of that range, which puts us at 4% 10-year yields. I think the bigger drama is going to play out in the 2-year sector, and we see 2-year yields at 3.50 by the end of the year.
I mean, this is where Michael Purvis was at Tallback, and I think he's scheduled next week. He's fly fishing somewhere.
Good for him
right now. But to the point, the short-term paper, the Sweeney yield. I mean, did he just say 3.50? Is that what I heard?
No, 4. We'll get down to
4.0. No, on the 2-year yield.
Oh, the 2-year, yeah.
4.05 right now.
Yep.
Equity markets churning here, up 18 right now. The VIX comes in a little bit, a better tape, 20.80 on the VIX, Paul.
Ian, a lot of folks out there, both academics and practitioners, say this Federal Reserve historically has used kind of not bad data, but certainly historically dated data, backward-looking data. And if you looked at the real-time stuff, you could make the call that inflation's already whipped, and maybe they should be even cutting rates here. How do you think about that?
I'm very open to the idea that it's difficult for monetary policymakers to use hard data because there is the lag in data collection, there's the lag in reporting. However, I don't think that the idea that if we look at the real-time data, for example, oil prices for some of the more obvious markets, that the Fed should be basing their monetary policy decisions off of that. Instead, it is those forward-looking indicators. So look at break-evens, look at the survey-based measures, and that's what the Fed is worried about. And I think that that's why the Fed's going to be reluctant to start cutting again.
So on a yield basis, if we get a Lyngen 4.0, just, you're sitting around and having a Labatt's. I mean, Ian, just to cut to the chase, what's it mean for the housing market? Is it like boom recovery, or is the ambiguity that wages are slow, as Neil Dutta talked about, where we don't get a housing recovery?
I think that the housing market is going to struggle. Part of the reason is that the mortgage rate to treasury spread is still relatively wide for a variety of reasons. And as long as mortgages are high, then translating this through to a stronger housing market is going to be difficult, especially if we see an increase in the unemployment market or the unemployment rate. That's where I start to get really worried about housing.
Great summary. Ian Lyngen, thank you so much with BMO Capital Markets, working in fixed income there. We're going to come back to economics. Francis Donald with us here, really off the shock, as Paul mentioned, of consumption, of personal spending.
That kind of got my attention there, yeah.
Everybody writing this weekend, Paul, I wondered, do we start to see sub 2% statistics?
Yeah, I mean, as Ian was suggesting, that this could, you see some of this personal spending data, Tom, it could factor into GDP numbers.
I mean, do you have to cut back when you go out this weekend? You're in God's basement. Do you have to cut back and go with a bud?
I go pretty lowbrow anyway. Pizza. It's Friday. It's pizza and beer night at the Swan Tavern. Keep it simple.
There we go. Right now, with our news in New York City, she'll be at the Swan Tavern, Lisa Mateo.
It is pizza night every Friday in the Mateo house. There you go. All right, let's get right to it. From futures right now. Right now, we're seeing green on the screen. This is after that inflation data came in line with estimates. PCE price index year over year for January. You heard as expected 2.5%. Core PCE year over year as expected 2.6%. Personal spending came in lighter. Personal income a bit higher. So now we see the reaction on Wall Street. Still not too much movement. Up about 12 points for NASDAQ futures, Dow futures up about 0.4%, 205 points. S&P futures up 0.2% or 15 points. We have the 2-year yield, 4.05%, little change. The yield on the 10-year, 4.25%, and that is little changed. A few companies making news. We have Meta said to be in talks with Apollo for a $35 billion financing package. That's to help develop data centers in the U.S. And Meta actually leading the Mag 7 stocks before the bell. Their shares are up about 0.7%. NVIDIA falling down more than 1.5%. And when you see shares of Tesla actually on track to drop for a record-matching 7th session in a row, its shares are down just over 0.5%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. You guys are killing me. Now, like when it's pizza night at the Sweeney house, it's some fancy, it's not gluten-free like what Lisa's doing.
No, thank you. No, thank you. It's a Catholic thing, Just get pizza and beer.
That's what it is, because you couldn't eat meat on Fridays.
Yeah, exactly. That's how it works. Why. So go to Swan Tavern, pizza and beer. It's always a good Friday.
I agree, and unfortunately, there's a Famiglia's near where I live. I mean, it's just so darn close. I mean, I may have to have a slice on the way home. We'll have to see. There's a lot going on here, folks. It's always important to talk to Francis Donald with RBC, the Royal Bank of Canada, on inflation and growth. But based on conversation 1, 2, 3 of this hour, and following on to McKee on the Fed, Francis Donald all of a sudden may be the conversation of the day. Are you going to write for Monday, Francis Donald, of sub 2% real GDP?
I don't think we're there yet, Tom. So our forecast for 2025 was 2%, and that's a bit of an annoying forecast because 2% is sort of the break-even point for a lot of equity models. So a lot of folks are hoping you're going to go sub 2% or above 2%, but 1.9 isn't going to make or break the U.S. economy. And you know what, Tom? I know there's a lot of January data that just landed, but the path of the U.S. economy, there are so many potential outcomes based off of the sequence sequence and size of Washington policy that even if you see downgrades from 2% to 1.8, that's probably not changing your outlook on what's ahead. It's just marginally changing your starting place. So I am more focused on headlines related to tariffs today, a little bit of the upside surprises we've been seeing in Europe and Canada, maybe changing the starting place for the two. Wouldn't get too hung up on a GDP forecast said from an economist.
I listened to Ed Yardeni, who's been, of course, talking of the roaring 20s here, and he was heated that, yes, there's a lot of noise now and a lot of worry in that. We're pulled back 4% off this great bull market. Francis Donald, what's your vision for the end of the year? Do we once again get a growth recovery as we have the last 2 years?
Well, Tom, we're a big believer that there's two economies at play in the United States. There's the wealthy who are benefiting from non-income gains, that is stock markets, house prices, they're net savers, so they're doing great with those high interest rates. That part of the economy is incredibly resilient, and that part of the economy is absolutely experiencing the roaring 20s and are likely to continue to do so, absent some sort of wealth shock. And then there's an entire segment of America, in fact, the other 90%, that are struggling under the weight of high interest rates, and you're going to see that start to creep into some of this data. They're still responsible for 50% of the economy. This is so critical to 2025 because it's muddying our ability to read so much of the soft data versus the hard data. High income Americans are going to lift aggregate data probably through to year end, unless they see a wealth shock, of course, and other pockets of the economy are going to look very much like they're in recession. So we are looking at things like consumer credit data. We've actually seen credit card usage as a share of retail sales popping higher. That's higher rates coming into play. And if we don't get rate relief in big segments of the United States, then big parts of the United States will see absolutely sub 2% growth. So for markets, the aggregate matters. For corporations who are thinking about their operating environment, when we talk to our clients, we're saying to them, who is your client group? Because I can't give you one headline number in the United States anymore to explain the entire path of the U.S. economy. We just got to get deeper.
So we got to get Francis Donald on twice.
Yep.
We can have her on now about the booming economy, and you and Alex can have her on at 11 a.m. about the gloom.
Exactly.
That's the way we roll.
So, Francis, can we still kind of refer to the U.S. economy as, one of exceptionalism? Is that still a storyline?
Oh, sure. And you're still going to see U.S. resilience in play probably for several months, at least based on the path that we're seeing now. Now, is that exceptionalism as high as maybe those who had expected it 6 months ago? No, there are some downside surprises. One of them is that the Trump administration, a lot of the enthusiasm economically was that we'd see those corporate tax cuts and that deregulation. But I remember a few months ago talking to the two of you in New York that it's going to matter what the sequence of policies are. And we're not getting a sequence that's really market friendly right now. We're hearing about tariffs and maybe fiscal pullback before we get some of that juicy reflationary type of content. So this is going to be really important heading into 2025.
You got an entire combine. I remember the day Royal Bank of Canada took out Minnesota, Piper Jaffray, I believe it was.
Yep.
And you've done such a great job with a cross-border view at RBC, Francis Donald. What is your summation of the power of Canada with a tariff response, dare I say, tariff retaliation to a quoted 25% statistic? Can Canada get surgical about that to put Americans out of a job to shift the president of the United States?
Well, just a reminder, I'll give you a list, Tom. Canada provides 60% of oil imports to the United States, 90% of electricity imports, 99% of natural gas, 85% of potash, 98% of canola, 34% of your meat, and let's not forget critical minerals, which is 19% of U.S. imports, and 27% of your uranium imports come from Canada. Canada helps to heat the United States. It helps to feed the United States. And this is not 2018 anymore. The U.S. is struggling under an electrical fuel grid and has substantial energy needs that Canada can help to rectify. So I think the focus should be on how much can Canada support U.S. exceptionalism going forward, and what is the upside of actual increased collaboration between the two countries. That's the story that I think will resonate, because President Trump has huge ambition for what the U.S. economy can become, and there is a lot of upside for the U.S. as well. Canada upside equals U.S. upside. We've spent a lot of time thinking that Canada benefits from the United States. The reverse is also true, and we got to push that narrative, not just for Canadians, but for Americans as well.
Is she running for office?
Awesome. Proud Canadian.
Francis,
right
that was wonderful.
Proud Canadian right there. So, hey, Francis, I think I first became sensitive to this K-shaped economy and what it really means and how pronounced it is, maybe in the 2016 election cycle. And now here we are, almost 10 years later, it still seems like it's still a thing. Is this a permanent part of the U.S. economy going forward, do you think?
Oh, yes. And actually, in 2016 and through to 2020, we would talk about the K-shape and the concept that there was actually like haves and have-nots, and that was a structural situation. The problem that we're encountering now, especially in the past 2 years, is that in the past, the haves and the have-nots actually moved more or less the same throughout. So good times were good times for everybody. Bad times were the reverse. The reason there's so much focus from economists like myself and from RBC on the K-shape is that not only do we have this huge inequality, but their economic situations are not moving together. They're moving separately. So in the past, you could look at one group and know more or less how the other ones were moving. That's just not the case anymore. It's broken our models, and it changes how we have to talk to clients about who their end customers are.
Francis, got to leave it there. Thank you so much. Francis Donald with RBC. Bloomberg surveillance this morning with these important market-moving data. It's brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. Joining us now, Michael McKee, leading all of our economic coverage. Okay. Their inflation mandate, there's a job mandate. Does the Fed have a GDP mandate?
Well, if they do, they don't. But if they did, they're starting off the quarter on a very bad note, because we had the largest goods trade deficit ever by a big margin. Exports were up only 2%. Imports up 11.9%. What it appears to be is orders pulled forward because of the potential for tariffs. Imports of industrial supplies up 33%. So the bottom line for the economy, and you mentioned GDP, is that the GDP starts off in the hole because
whole negative.
It's too early. Unfair question because I haven't done the math, but it's going to push it way down where we are at the moment because it subtracts from growth.
All right, when you do the math, let us know, because I'm not into that whole math thing. So how do you think the Fed's going to view this, Mike? I mean, again, the inflation comes in right in line, but again, Tom and I have been talking about this real personal spending kind of was a surprise on the downside.
Yeah, personal spending is a surprise on the downside. They're going to have to look at why that might be. The personal income number came in high, but that was largely payments to farmers. Farm insurance was up 32% during the month, and also 1.7% increase in dividend payments. So if you were on the farm or on Wall Street, you were doing pretty good. We also had our usual increase in Social Security. Wages still up 0.4, though, same as it has been. So no decline there, but people are just pulling back, and it may be worries about tariffs.
As our audience looks ahead to Monday, what is the literature you and I are going to read Sunday into Monday? How are people going to interpret this front loading of inventory in from the world?
Well, I think all the research is going to be pointing to Tuesday and whatever the president does on trade and tariffs, and all this just kind of feeds into that. The inclination is to look through it. We will see a rebound in trade because everything was pulled forward, so we won't see as much in the way of imports next month. But it just does leave the question of where do we go from here? And I think the Fed looks through these numbers, especially since the inflation numbers in PCE were showed progress continuing, but we're all going to kind of be on the knife's edge waiting to see what Mr. Trump does on Tuesday.
Okay, I got 20 seconds, which is all they deserve. What an odd March for the Boston Bruins. What do they need to do?
The consensus is they're going to sell and try to build up some draft capital.
Sell bodies.
Sell bodies and build up draft capital.
It's like the Patriots. It's a rebuilding year.
It has turned into that. It didn't turn out to be the year that they had.
The Celtics aren't rebuilding.
Celtics are not rebuilding. No,
Michael McKee, thank you so much for that report. We say good morning, 92.9 in Boston. Travis returning. We're all Taylor. One of her first songs.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. At this moment, we turn to the State of the Union on Tuesday. Really important, as Francis Donald just mentioned, Paul, tariffs, announcements of bigger tariffs front and center.
It looks like it. And again, we'll see what happens with Mexico and Canada. Those are some big ones. And we heard from Francis Donald at the Royal Bank of Canada.
And Ian Lyngen before that with the Bank of
exactly
Montreal.
Right. So we'll see. And again, we'll get to hear from the president on Tuesday.
Our team doing a great job in it. Thank you so much to her. You know, most of the interns, one of them's from Chapel Hill.
Oh, that's too bad.
It's a weak moment, but right, there you go.
They're trying their best.
Great guests today. Thank you so much. To have Ian Lyngen and Francis Donald back-to-back was a real treat. Bloomberg Surveillance this morning, we're brought to you by Oppenheimer. Oppenheimer, they focus the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Wealth management, capital markets, investment banking. And we say thank you to Oppenheimer for their support this morning. Futures up 11, green in the screen. The VIX 21 is well, and that's where we are right now.
Yep. So let's go to Lisa Mateo. Let's go to there. Right?
Okay, let's go to Lisa right now.
She'll kick it off. She's the boss.
From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
You got it. And we have futures, advancing right now. This is after some relief on the inflation front. The Fed's favored inflation gauge rose at a mild pace in January. So you had core PCE price index rose 0.3% from December, 2.6% from a year ago. Consumers, though, they did pull back in spending, falling 0.5%, marking the biggest monthly decline in almost 4 years. Let's start with NASDAQ futures. Little change, up about 6. Dow futures up 0.3%, 169 points, and S&P futures up 0.1% or 11. The 2-year yield 4.04%. That's down 1 basis point, and the yield on the 10-year 4.24%, and that's down about 2 basis points. Stocks in Asia taking a hit. We have the Hang Seng down more than 3%. That's affecting U.S. listed Chinese stocks like Alibaba down about 3%, Baidu down 2%. Stocks in Europe mostly lower. The one exception, UK's FTSE in London right now up about 0.3%. That's after those talks between President Trump and Prime Minister Keir Starmer. The Bloomberg Dollar Spot Index up about 0.1%, but Bitcoin, that has been the story of the morning, really taking a hit. Now down about 3% at just over 81,000. Its value, though, has dropped more than 25% from its all-time high. That was set about 6 weeks ago. But crypto-related stocks like Coinbase down 1%. Tom's favorite, Riot Platforms, there you go, about 1%. And even MicroStrategy down nearly 2%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. What is important here is what's going on, the way all of this politics in Washington spreads out across the country. Margaret Brennan in Face the Nation this weekend will have really one of the key conversations with someone from the hills of New Hampshire, a star at Harvard basketball years ago, and now holding court as the governor of the Commonwealth of Massachusetts. Margaret Brennan, Face the Nation, will speak to Governor Healy today. What's your first question, Margaret, to Governor Healy? She's in the crosshairs of Democratic politics.
She is indeed. Well, we want to talk to her about some of the fights that they're having with the federal government over funding. Obviously, Massachusetts has a lot of research centers, and there is some concern for NIH funding and other things that are going to be impacted by some of these freezes, pauses, and cuts.
Fascinating to me is, we're just now here in the act that we do, Margaret. Paul and I are just turning to the State of the Union on Tuesday. You at Face the Nation have been working on this for weeks. How has your script for the State of the Union changed over the last, I'll say 2 hours, but, maybe 12 hours?
Yeah. Well, those scripts change up until the last minute, as you well know. They will for the president as well. A lot of rewrites in the limo on the way to the congressional address. But I know for us on Sunday, we want to take some stock of where we are and what the public sentiment is. We're going to have Anthony Salvanto with his latest data on the read of the public, particularly when it comes to how they're feeling about inflation and the economy, which, yes, we know day one promises aren't really meant to be day one, but there is some frustration among Americans that they're still paying what they're paying at the grocery store and that prices aren't coming down. We want to talk to Treasury Secretary Bessent Sunday about what this new round of tariffs is going to look like.
And Margaret, we're going to hear, you mentioned tariffs. Again, the rhetoric coming fast and furious out of Washington, D.C. The president continues to really focus on tariffs. What do we know here?
Well, everyone's just going with what the public says and what the president says in public. We know there's very little process. We just now this week got a USTR in place, and there's now a Commerce Secretary, and we know that Howard Lutnick, as Secretary, wants to control tariffs. We will try to understand from the Treasury Secretary what part of the pie he has control over, what insight he has into whether these tariffs on China, Mexico, and Canada are indeed coming on Tuesday, what the auto tariffs will look like. One of my other guests, John James, a Republican from Michigan, is concerned on that front when it comes to impact on manufacturing in his state. So we'll try to get a bottom line for you. But, when we see social media posts saying tariffs are coming, is it just a negotiating tactic? If so, what's the ask? I mean, it's not clear.
What is the CBS reporting on a unified Republican Party to greet the president at a joint session of Congress? I mean, what are the divisions within the GOP?
Well, it's hard to find any public divisions they're willing to own.
Yeah, but come on, Margaret. You're talking to everybody. Margaret's over at the Hay Adams Hotel. Look in the room. Come on, Margaret. What's the backstory here in the GOP?
In terms of the room of lawmakers, there are divides when it comes to just deciding how to deliver on the president's funding requests to do things like shore up the border and defense spending and the like. There's also a fair amount of discomfort in the House about the ability to get anything more than one big bill done when it comes to the tax cuts. None of that's resolved. There was a budget agreement, but the budget agreement is really just a blueprint that hasn't been delivered on yet. So we're going to try to get through some of that with John James as well Sunday.
And Margaret, back in your historical remit here, geopolitics, that's still front and center in some hot spots around the world. What's the feeling in Washington where we are on, say, Russia, Ukraine? Let's just go there.
There's been a parade of world leaders through the White House this past week. I mean, you had President Dutta, Poland, you had President Macron of France, you had the UK Prime Minister, you had the EU's top diplomat who I sat down with yesterday, and today you'll have President Zelenskiy of Ukraine all coming to talk to President Trump to say, wait a second here, are you getting the information you need when it comes to what Europe is already doing? They don't trust that the president is getting briefed, and they also want to make sure that he knows that, for example, the EU coughed up $145 billion in financial, humanitarian, and military aid over the past 3 years. You saw sort of a public correction by President Macron of President Trump. That was a little bit awkward. Yeah, we said, no, we're paying real money here. So they don't trust that the president's getting information he needs. They also want to make sure that America remains available as an arsenal. You know, a lot of the European countries are still buying American weapons, even if they're providing them to Ukraine, because they don't have that capacity within Europe right now to the extent that we do. And of course, there's some side pitches happening. UK Starmer was asking for a free trade deal when he was in the Oval yesterday.
Margaret Brennan, thank you so much. Looking forward to conversations with the Secretary of Treasury and the Governor of the Commonwealth of Massachusetts. Look for that on Face the Nation. It's across the CBS television network. Sunday morning, you could hear Face the Nation. Sunday at 2 p.m. in New York, Washington, and 92.9 FM in Boston. Face the Nation, Sunday at 2 on Bloomberg Radio. Why don't you drag in here Jordan Rochester, who's, he's rewriting his rewrite for Monday Research here at Mizuho.
Absolutely, Tom. Jordan Rochester. FICC macro strategy for our friends over there at Mizuho. Jordan, what's your feeling here about, this flooding the zone approach from this White House and maybe some of the policy uncertainty that creates in the marketplace? When you talk to your clients, how do you kind of suggest they deal with that?
Well, from a politics perspective, it's getting things done, which is pretty painful for us in markets, keeping a track of it all. Flooding the zone means you split and divide your opposition. They're not sure which agenda to oppose in that day's media round. But for us in markets, each one has a different investable theme. You've got tariffs hanging over Europe, Mexico, Canada, China like a Damocles sword, with the risk of near-term dollar appreciation. But to be honest, this market is trying to call the bluff of this president and doubting whether these tariffs will go ahead with the numbers he's put forward or at the pace that they've been announced. So this weekend could be a big one. The market still has quite a few people out there thinking it won't happen in the way that he's said, such as the 25%. Then you've got the Doge labor cuts, and that's going to really weigh on NFP prints in the months ahead if you were to listen to the PR campaign from Elon Musk. The actual numbers so far are quite small, a lot smaller than what he would be suggesting. But we are aware that in the next couple of months, if things accelerate from Doge, it could be tricky for the Fed. This market will still probably try to price in rate cuts, not rate hikes, even though we think the Fed's on hold for the rest of the year. And then you've got a deregulation agenda. Surely this is an administration that's good for business, but the tariff policy is kind of conflicting with it. So in answer to your question, he's flooding the zone, many different policies. Each one has a very big impact on markets. Some of them conflict with each other, and it kind of leaves us all scratching our heads.
So I guess from the currency perspective, Jordan, do I just kind of buy the U.S. dollar and just go sit in a corner there and wait?
If it wasn't for tariffs, I'd be telling clients to sell the dollar because there's a great sort of make Europe great again mega, not MAGA theme in Europe. However, the tariffs are a big deal for everyone's terms of trade if they are to happen in the numbers that we're expecting them to see. Imagine if Europe gets a 10% tariff, for example, across the board, reciprocal or not, that would mean a lot for euro valuations. So what we're saying to clients right now is yes, buy the dollar. We think euro could go down to 102, even parity if the number of tariffs is higher than what we expect. And then actually that would be a great opportunity at some stage to take the other side. So it's a down in euro and then up in the second half of this year, because I think the EU will get their act together and respond to this American threat by doing reform, more issuance and fiscal issuance, and we'll see a better investment outlook for the Eurozone in the second quarter.
Jordan, I look at the ability to try to, for all of our listeners and viewers, to get a single point terminal view, let's call it December of this year, dare I say into 2026. You have the luxury of Constant Rizzuto and Rochester at Mizuho. Do you guys have a combined view that gets us into next year, or are all bets off?
Well, it's hard to predict what the weather will be tomorrow, Tom, let alone what's going to happen next year. But I imagine what's going to probably happen is we have a lot of the events in politics in the first half of this year. And the second half of this year will be more about the implications for the economy. What do I mean by that? We've got tariffs in the next 1 month or two. I think a reconciliation bill will probably pass through Congress in the second quarter. It might even be April. Joe Biden got his done in March in 2021. So it's very possible that all the politics happens in the first half. The second half will be about the implication of it. And I think that we'll see European growth start to outperform US. This market, Tom, is trying to bring forward that theme. I just think we're not there yet. We need the tariffs to go through first before I can jump on it.
Pound sterling here, Jordan. What's the call here?
I think sterling lower. We're looking for something like 122 during the stage of the next few months, and that's on the back of the tariffs. I also think that there's a domestic weakness story that's creeping up. Last year, the best strategy I had was to tell clients to hold back from doing dovish calls on the Bank of England because we had very sticky inflation. But the budget has changed things dramatically. There's been a tax hike for employers, and what we've seen is a collapse in the employment intentions of firms after that tax hike. It costs everybody across the United Kingdom 1.7% more to employ staff per year from April onwards. So I think what we'll see is in the April numbers that we get in May, quite a substantial weakness in the labour market feeding through to growth. And then by the June meeting, the Bank of England cuts. That's something that's a bit of a non-consensus view because everyone thinks the Bank of England cuts every quarter. I think they accelerate it when they get to June's data round, and that should push sterling lower.
Jordan, right here, what final question? As you await tariffs, and I get that, I have great respect for the idea, wait for the facts. Is there a tradable big figure move in any of the major currencies right now?
I think there is, and I'm at a Japanese bank, and I think Japan is the one. There's a structural change taking place in Japan that's decorrelated it from the rest of the cycle. Now, dollar yen, of course, follows US interest rates, just like everything else.
Yeah.
But if you look at Japanese rates, structurally higher yields is the story, Tom, and I think that's a sharp ratio that's going to be pretty high.
This is really critical then. Do you suggest that the reflation theories, plural, of Japan have succeeded?
I think they're in their infancy, but they're going to succeed. If you look at the labor market, we are seeing some of the largest wage hikes, Tom, since the 1990s. You've got part-time workers getting 6 to 7%. You've got the overall economy at 5%. You've got full-time salaried workers at 3%. These are all numbers above 2%. And we've got the upcoming Shunto negotiations, Tom. We'll get some wind as to what we're going to get out of those numbers. But I think the number's going to be another strong 5% like it was last year or higher. You might have seen the Bloomberg story earlier in the week about steel workers asking for 14%, numbers we've just not heard of before in Japan. So if the Shunto goes well, I think that we're going to see this wage story become self-fulfilling and Japanese core inflation will be stronger than what the Bank of Japan expects.
I would respectfully suggest, folks, I haven't heard that conversation that we just had with Jordan Rochester in 30 years.
Yeah, I think you're right. I think you're right.
To go like that was fabulous. Jordan Rochester with Mizuho. Thank you so much. Head of FICC Strategy.
You can tell that Jordan, he gets out of the office a lot. He travels, he talks to clients, he sees what's going on.
He's like at every Premier game.
He knows what's going on.
I was going to ask him if Arsenal can catch Liverpool, but that was amazing what he just said there on the success of a reinflation strategy at Japan. Futures up 13. With our news in New York City, Michael Bond.
Thank you very much, Tom, Paul, Lisa. Ukrainian President Volodymyr Zelenskiy heads to Washington today to seal a minerals deal with President Trump, but he'll be looking as well for assurances that the U.S. won't sell out his country in the rush to make a peace deal with Russia. We get more from Bloomberg's Greg Sullivan.
Trump has ruled out putting U.S. Boots on the ground. Europe has said that they don't see a viable option without U.S. support. Obviously, there are talks in Europe about putting peacekeepers in Europe, but Russia also has said that they don't want to see NATO peacekeepers. So it's quite a quandary, and that will be a huge sticking point for getting to any kind of ceasefire up ahead.
Bloomberg's Greg Sullivan reporting. President Trump and Zelenskiy are set to hold a joint news conference at 1 p.m. Wall Street time. Listen live on Bloomberg Radio or watch on Bloomberg Podcast's YouTube page. Voters from across the country are turning out to voice their opinions on President Trump's plans to lay off tens of thousands of federal employees, including veterans, in an attempt to shrink the government. The Department of Veterans Affairs dismissed more than 1,400 probationary workers earlier this week. Veterans make up 30% of the federal workforce. Veteran Dustin Conklin says he moved from Virginia to Illinois in September to work at the Natural Resources Conservation Service within the USDA. 2 weeks ago, he was told he was terminated due to poor performance.
And through this whole time, I just kind of see, on the internet, there's, Musk playing with chainsaws, the president, he's posting things laughing about making people cry. And it's just kind of been defeating. And I just kind of feel like there's no point anymore.
The president was asked if he's tracking how many veterans have been fired so far.
And so we're watching that very carefully, and we hope it's going to be as small a number as possible. But we are having great success in slimming down our government.
Meanwhile, a federal judge in San Francisco finds the mass firings of probationary employees were likely unlawful. The decision grants temporary relief to a coalition of labor unions and organizations suing to stop the Trump administration's cutbacks of the federal workforce. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The Academy Awards, the excitement in this room about the Academy Awards. Lisa Mateo, are you having an Oscars party at the Shea Mateo?
Yes, Michael Barr's wife invited me to theirs this week.
Yeah.
She's having a big party.
She's having a big party this weekend.
Nice.
I'll be asleep because, I have to be to work. But there's going to be a bunch of folks at the house.
They're going to be having a good time.
Oh, yeah.
They're watching him at home, and they're basically saying, really? The Dylan movie got high marks.
Did it?
Yeah.
Okay.
Is it like Favored? The Dylan?
I think The Brutalist is favorite.
The Brutalist is
favorite. With Demi Moore.
Dylan.
Can we get somebody on staff here that's seen every movie the first
we need
week?
to.
They're over there at Lincoln Center.
Hey, the 1972 film about the Munich Olympics and the Israeli team. What's the name of that? I'm so
Don't
sorry.
know the name of it, but got huge response.
I inadvertently blew the ending for my wife who was watching it. Now, I don't want to give it away, but, I'm just speaking as a news. Yeah. That's what I thought. But I don't want to give it away. But, that I watched it live.
September 5 is, I believe, what it's called.
Yep, you're right.
Okay, well, we'll see. There's a lot of enthusiasm here for the Oscars.
Yeah.
We're all working Monday. I'll be here.
Sure. Absolutely.
We'll got to see what they're wearing. That's the big thing.
What are you
wearing? They're wearing on the red carpet.
Who are you wearing?
Yeah, Lisa, who are you wearing?
We will
That's
see.
The question.
This is Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this features report sponsored by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. Well, after a string of reports, they suggested price pressure is heating up again. We have some relief. The Fed's preferred inflation gauge rises at just a mild pace. Right now, we have NASDAQ futures. Little change, down about 6 points. Dow futures up about 0.4%, 178 points. S&P futures up 0.1% or 9 points. The 2-year yield, 4.04%. That's little change. And the yield on the 10-year, 4.24%. And that's down 1 basis point. The Bloomberg Dollar Spot Index, little change. And Bitcoin down 3% at just over 81,000. Few companies making news. That's Microsoft. It's closing Skype. It comes 14 years after buying it for $8.5 billion. comes to an end in May. Users are going to have that option to change over to Teams instead. And finally, workers who use generative AI, well, they say they have a substantial number of work hours that they're saving by using it. A new Fed study was from the Fed. It showed on average workers 33% more productive each hour they use the technology. So how much overall? Well, they say it saved them. Some of them say about 4 hours or more in a week. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
I have a relative out in the Great Plains. We talked about this, I think, 2 afternoons ago. He's a big shot in computers, and he's heated that AI will not replace human judgment. He says we're distant from that. All the different...
Good to know.
I have no idea.
Yeah.
But all the different evolutions. And he says it gets so far and then.
I just think about some of the tasks that as a junior investment banker we had to do. I could see, AI replacing, doing a lot of that.
The boilerplate.
Yeah. I'm sitting at a printer at 2 o'clock in the morning in Lower Manhattan looking at proofreading a prospectus.
Proofreading to 100ths of a dozen.
To a bond prospectus.
So people are saying, what I get from doing the different conferences that we do, people are saying, and companies are saying that, okay, so what's going to happen is that they're not going to maybe necessarily let go of people, but what they will do is they will hire fewer people because that's going to be the switch.
It's the great unknown out there right now. Lisa Mateo driving the market to red and green on the screen. For the VIX 21.02. So looking at the VIX, a spike up in September of last year, a spike up in October of last year, a spike up in November 1 of last year, big spike up year end. I mean, I guess that was year end Christmas noise, if you will. And now another spike up to 2102. The perfect guest is Victoria Fernandez to join us around the market opening with Crossmark Global Investments. What are your clients doing given this new uncertainty, Victoria?
Well, hopefully they're having their conversations with us and realizing that there is just a lot of uncertainty kind of percolating right now around us, whether it's fiscal policy, trade policy, regulatory policy, monetary policy. All these things are, there's not a clear path forward. So we're continuing to be really judicious, but being invested in this market, that's how we like to approach these types of environments. We are changing a little bit because you see some rotation underneath on the technical side of the markets, seeing some leadership changes, although financials continue to be our favorite sector. And so we're following that thesis. Some more staples in your portfolio, that more defensive play in your portfolio to weather through the volatility.
Victoria, how do you position just the last few days, trading days? We've had the little bit of a pullback in the market, erasing the year-to-date gains. Just are your clients concerned about that, or just natural part of a overall longer-term bull market?
Yeah, well, I wouldn't say that they're concerned about it because at the beginning of this year, we kind of set expectations that we did not think we were going to see a huge move in the markets this year, that we would expect a 5 to 10% pullback in the markets, not a full-on recession, but a pretty significant pullback. And we're now, 5% off the highs that we saw earlier this year. So I think it's what they expected. And we told them how we would be positioned. It's going to be those companies, those low beta companies, those companies with low price to cash flows, with consistent earnings. And those are actually the types of companies that have been rallying. It's those high valuation companies that have really pulled back.
Victoria Fernandez with us. We're going to try to get to the market opening and come back. We have to ask her about Bitcoin.
Oh, sure. Why not?
We'll give her a warning.
For that.
Don't hang up, Victoria. She's with us with Crossmark, and we'll get to her after we get a market opening. To review the economic data, the PCE was pretty much bang on, but you heard some piercing messages from our guests on the front loading of imports into America. Thank you, Michael McKee,
yes,
for that.
Yes, that was interesting.
That businesses are getting out front and bringing the stuff in before any decision on tariffs, including what we'll see at the joint session on Tuesday. To get the markets open, Lisa Mateo.
And we're off and running. We'll start with the S&P 500. Right now, it's down just a fraction right now, down about 2 points. We'll go to the Dow. The Dow up about 0.1%. It's at 83 points at 43,331. We go to the NASDAQ right now, just kicking in, down 0.3%, 70 points, 18,479. The 2-year yield at 4.03%. That's down 1 basis point. The yield on the 10-year, 4.23%, and that's down about 2 basis points. Want to go to spot gold, $2,843 an ounce. That's down more than 1%. Brent crude down more than 1%, $73 a barrel. WTI crude, $69 a barrel. The Bloomberg dollar spot index, little change. And we head over to Bitcoin, down nearly 3% at just over 81,000. At the open, also check in with shares of NVIDIA, down more than 1.5%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. I just did a moving average study on Bitcoin, and I'm going to eyeball it down 17% from where various moving averages did their ballet. Victoria Fernandez with us. Victoria, did you allow your clients to buy Bitcoin, or did you just say, we're not going to participate?
So we did not purchase any Bitcoin for our clients. I'm not sure if they went and did that on their own or not.
Right.
But the types of securities we look at and the fundamentals we want to see on those companies, that's just not what Bitcoin is. It's basically tied to the NASDAQ, and you see it trade basically as either a risk on or risk off type of element in the market. And right now it's going right along with the NASDAQ. We see it pulled back, risk off for sure.
I mean, I got a moving average back at 62,000. I'm sitting on my long-term moving average. Victoria, what do you expect to see in the ETF frenzy of Bitcoin if we break through some of these uptrends that we've seen since October of last year? I mean, does everybody cash out?
Well, I mean, again, we're not invested in it, so I'm not an expert on the movements of how people want to invest in it. But it seems like if it's a risk element, and we've seen the growth concerns really come into play, we see concerns about inflation, then I could see where people might go ahead and start selling out of their Bitcoin, trying to maybe cash in on a little bit of what's left and waiting for that trough to maybe go back into it.
Buy the dip Bitcoin.
Exactly.
You did not hear that from Crossmark Capital, folks. Paul?
I'm not making a suggestion on what to do with it.
We'll let Bob Dole do that.
Exactly. Victoria, what are we doing? What are we doing in the bond market here? I'm looking at the 2-year Treasury at sitting right on 4% here. Is that good enough, or should I be taking some credit risk?
Well, it's interesting because let's look at what credit spreads are doing. Not a whole lot, right? They're not signaling that there's big concerns in the market, even though we've had so many other elements start to raise red flags for us. Credit spreads widened out a little bit last week, but they're still significantly tight from a historical perspective. So I don't think you want to go all in at these levels. You want to maybe build a little bit on the short end, some of those more cash alternative types of instruments, because those yields are still pretty high compared to historical levels. And then I would barbell it out on the longer end, add a little bit there so you can have some cash flow over the years. But for right now, you have to be concerned that credit spreads will start to widen as we see more growth concerns happening. And I would wait for that opportunity to really build out your credit component.
Victoria, thank you so much. I promise we will not attribute Bitcoin strategy to Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. I mean, I have my own opinion. I think people know what it is. But, Paul, there's some carnage out there. I mean, am I right? Billions went in?
Well, yeah. I mean, what was interesting about that move up to the recent highs was a lot of strategists saying, hey, you know what? International money is flowing into U.S. equities, particularly to the big cap names, because that's where the returns are. And I wonder how the flows are looking over the past, week, the 10 days as this market pulls back just a little bit, 4 or 5% off the highs.
Deep into the 4 minutes into this session of trading, red and the green is slipping away into red. The VIX goes out almost to a 21.96 on that. Looking at the Sweeney yield, it comes in 4.0259. A 399 2-year would be a wow statistic. We're not there yet. From New York City on YouTube, subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got stocks mixed, yields falling. This is after the latest inflation data. We're kind of reinforce those bets from the Fed that they will have a little bit more room to cut interest rates at least twice this year. So we go to the Nasdaq, down 0.3%, but the Dow up 0.3%. The S&P 500 little changed, up about 3 points. This all comes as all Mag 7 shares right now falling, including Nvidia down more than 1%. Same for Tesla, just about, and who else? Microsoft down about 0.7%. Google just ticking up right now, up about 0.1%. This comes as the 2-year yield, 4.03%, down 1 basis point. We go to the yield on the 10-year, 4.24%, and that's down 1 basis point. The Bloomberg Dollar Spot Index is little changed, and we have Bitcoin down about 2.5% at just over 82,000. We check in with shares of Dell down 6%. Its sales outlook for AI servers, will that really fail to alleviate those concerns about profitability? HP down 1.5% after its outlook missed. And then this story stood out to me. For the first time since the pandemic, millions of Americans late on those student loan payments. They're going to see a hit to their credit scores. How many? Vantage Score says more than 9 million borrowers behind on payments. It expects 2.3 million people to see their scores dip below 600 between now and May. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We welcome all of you across the nation on your morning commute on YouTube. Subscribe to Bloomberg podcasts out on YouTube. Really humbled by the growth that we've seen there into the beginning of the year. There is a wall. There's any number of walls in Washington, to say the least. There is a CIA memorial wall, of which there are 140 entries. There are 106 named, and there are 34 names on the CIA memorial wall not named. Some do, others talk. We now speak to one of the great doers of the American military, Mick Mulroy. He is godfather to 4 of the kids of those people on the CIA memorial wall. Mick, I'm going to cut to the chase. We just saw the chairman of the Joint Chiefs of Staff shown the door. Can our listeners, can our viewers know that our military is at work in an organized, productive manner on this Friday morning?
So good to be with you all again. I'd say, of course, the president does get to choose who he's going to have as his key advisors, to include the military. But I'd also say, and full disclosure, I know General Brown, that he was an example of meritocracy at work. He was exceptional throughout his career. The facts speak for themselves. You know, fighter pilot, squadron commander, wing commander, deputy at Central Command, in charge of all the Air Force in the Indo-Pacific, and then, of course, chief of staff for the Air Force appointed in the first Trump administration. So highly qualified. If there was issues with DEI, that's a policy issue. Just so everybody knows, the U.S. military, even the highest ranking, don't do policy. They essentially advise and they carry out orders by the civilian leadership of the Pentagon, including, you know, obviously the Secretary of Defense and his staff. So if that was an issue, then that could have been addressed without the need, of course, to remove CQ Brown early. He had much time left on his post. Right. Normally, that is not something that changes.
I got to be quick here because Paul wants to get in here. Mick Mulroy, as simple as I can. In the first term, we had Kelly. We had McMaster. You sat at the table with General Mattis. We don't have those people now, do we? This is a new approach to Trump, too, isn't it?
Yes. I mean, certainly, I think the 3 you mentioned are 3 of the best leaders of our generation, at least from my perspective, especially Secretary Mattis. But this is obviously a different cabinet. It seems to be, you know, you can pick on experience and accomplishment. You can pick on loyalty to the president and political ideology. And I think the latter is really came through in this. And that's, again, the president gets to choose that, but every president gets to choose that. So it's kind of it's an argument that you can make, but essentially so did President Biden, right? So I would say he picked these individuals primarily for their loyalty to him and their political ideology, and that's his choice. But that is a difference, I think, than the first cabinet, which was picked primarily for accomplishment and a long level of experience in the job that they were going into.
Mick, President Zelensky, Ukraine, coming to the White House today. Can you give us the latest sense of how you think this situation in Ukraine could play out in the coming days, weeks, and maybe even months?
Sure. This was a big week, right? We had the French president, then the UK prime minister, and now we have President Zelensky coming today, and maybe, I think likely, or he wouldn't be here, signing this rare earth mineral agreement. So starting with that, it's essentially ended up being that American companies will get access, whatever that means, to 50% of the minerals in Ukraine, which is substantial. I mean, I've seen reports from reputable groups that it's trillions. Half of it, or more than half of it's under the part of Ukraine that's currently occupied by Russia. So from the Ukrainian perspective, if the U.S. wants access to that, they need to help Ukraine gain their territory back. What's not in here, and what Ukraine really wanted, of course, were security guarantees. That is the biggest thing they need. And ultimately, there probably won't be a ceasefire agreement unless there's some security guarantees, because Russia has violated, specifically when it comes to Ukraine, the agreement not to attack them multiple times, starting in 1994 when they gave up their nuclear weapons, in 2014, after they already annexed Crimea, they agreed not to do it again. They did in 2022. So there should be zero trust on whether they will carry this out unless there's a security guarantee by NATO or European partners or the United States or all the above. If there's not, then it's hard to see how Ukraine would accept a ceasefire that would simply allow Russia to prepare to then attack them again. But we all should hope that's the case. We all should hope that, of course, President Trump and his administration are successful in getting us to a ceasefire that's lasting to stop this horrendous war that Russia started.
Mick, is there any scenario that you can think of where President Putin and President Trump could come up with some type of peace accord that does not include Ukraine at the negotiating table?
No, because ultimately Ukraine has to decide not to fight. I mean, they would be hard pressed to continue the fight, particularly by June, when all of the ammunition we've already provided start running out, without the U.S. support. But they can, especially if Europe really steps up. And they've already proven that they beat the odds, right? Most analysts like myself were predicting 3 weeks and it would have been over. And now we're over 3 years. So don't count them out. But the U.S. needs to continue to support. It's not just altruistic. It is in our own interest. They are depleting the Russian military so substantially that within the last 2 years, they lost more soldiers than we lost during the entirety of a war in Iraq. It is really taxing on them, and it's difficult for them to maintain this. Right. But it will be difficult for Ukraine to keep up that level without the U.S. full support.
Mick, what is the signal to our allies of what we witnessed at the United Nations this week? Back to 1945, we went with Team Russia.
So certainly scared the bejesus out of them, quite frankly. And there's two parts to that, right? So they're very used to their allies being what it has been, for decades, which is the United States and NATO, the most significant military alliance in history. Where I can say that they have fallen short, they being our European allies, that they've essentially left a lot of their security over to the United States. They had the biggest brother on the block, so they were fine with spending their money on things other than their own national defense. They've woken up to that. They are all increasing their expenditures on their own national security beyond what the NATO calls for, which is 2%, some going as 3%, up to potentially even 5%. That's a good thing for them. It's a good thing for NATO. And many presidents, to include President Trump, have been pushing rightfully for them to do that. So that's a good thing. But the problem is they might get to a point where they just don't trust the United States when it comes to our allegiance to NATO. I know Secretary Rubio have said that's not the case. So has National Security Advisor Waltz. I believe that's the case. But that has scared them so much that they are now concerned and potentially even starting an alternative to NATO.
Mick, we got to leave it there. We could talk for hours. With the Lobo Institute, Mick Mulroy with his service to the nation, with the Marines and with the CIA. Red and green on the screen right now. A little touch of green there. I'm going to call it a fragile lift to the market. The VIX out near 22 is 21.33. And of course, Paul and I looking at the Sweeney yield today, and it's in. There's no other way to put it. 4.04%. Not threatening a 399, but price up yield down in what we see. That was quite a conversation.
Yeah.
I mean, with a guy with some massive cred.
Yep.
You know, there's just no other way to put it. I can't say enough about his contribution to people that have put their lives at risk in our intelligence system, and particularly at the CIA. The Dow up 89 points again. Dollar showing some strength as well. Gold with a pullback under $2,900 the ounce. We'll have to see on that.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Oh, what a Friday it has been. We're getting set up for an interesting weekend. I really can't say enough about the interest in what Wall Street will publish as they look ahead into March. And of course, in the politics, thank you, Margaret Brennan, for a brief there from Face the Nation. And you'll hear it here on Sunday at 2 p.m. on Bloomberg. And of course, there's the recalibration of Washington press conferences today. Probably the press conferences will take up the entire Carol and Tim show.
Could be.
We don't have a show anymore. You know, we don't get to talk Dallas Trim Mean and Pizza Night. Like, we don't get to do that anymore because there's just no room.
Well,
you guys get it all.
Executive order signing, though.
We do get the executive orders. And I got to say, you know, man, they've been coming fast and furious. And I think, you know, the skill of everybody at this news organization to figure out what's news, what's new, and what is just the president taking time to talk about things that are of interest to him. And that's been the tricky part, I think, for markets this week, whether it's on tariffs when they're imposed or not imposed, what's going on. And I think that's why you see, you know, what are we now down on the year?
I got real uncertainty. Jordan Rochester basically saying he can't make an FX call at Mizuho until he figures out what the tariff numbers are. We had back-to-back Ian Lyngen with Bank of Montreal and Francis Donald with Royal Bank of Canada, and they just said, we have to see what the retaliation is to our tariffs.
I thought Mike Dutta was really interesting, too, about concerns about supply shock. You know, when I come on, look at it. I take notes, everybody. I feel like I'm taking an exam. I get sweats a little bit. No, but Mike Dutta talking about, you know, supply side shocks because of tariffs. And kind of the tricky position this puts the Fed in, because if this slows down growth, puts pressure on prices, inflation, like what does the Fed do? And, you know, I find creeping into conversations, you guys even said it's stagflation. He said, or was it was it Neil Dutta who said,
Look at your notes there.
I am. Neil Dutta who says, I don't want to say stagflation, but stagnation. But like, God forbid, and the tricky position the Fed is in right now.
So, but, you know, a fancy person like you're over at Andrew Bellucci's in Astoria, you know, getting a small round Triburo for $25 for a small round. It's mozzarella, marinara, Genovese-style pesto, and pine nuts. I mean, if you don't have the pesto or pine nuts, you're not rolling like Carol Mass.
Can I just tell you, I'm Raza all the way in Jersey City. If you don't know about it, it comes up top on the list. I do a marguerite. I get one of their breads that are freshly made. They only last a few days because there's no chemicals in them. A great salad. They do deliver, but you know what? If you deliver, sometimes you have to like order fast. Like I literally get off air at 5 o'clock, go to their app and order because it'll be like 90 to 120 minutes before I can pick up because they are
busy.
Yeah, you have to make reservations. It's crazy, and it's like 50, 60 bucks.
Mention this again. So for our audience in New Jersey,
it's Raza in Jersey City, and a lot of times when you do best pizza. In New York Metro or even across the nation, they come up. It's fantastic and it's always packed.
I'm at Famiglia. I mean, I think I have to stop at 2 or 3 Famiglias.
You're at all the Paris restaurants.
Yes.
Have an escargot.
That's why he scopes out the euro all day, every day. That's at the top.
I know.
The euro gets the parity. Boom.
Do you have any guests today, or are you guys going to wing it?
Yeah. We do have guests.
Zelenskiy.
Actually, in terms of Ukraine, we do have the University of Michigan professor Greta Uhling. She's got a book, Decolonizing Ukraine, the Indigenous People of Crimea and Pathways to Freedom. And I think what we have to remember, it's a country, and there's people there. And a lot of those people don't have homes, places to live, places to work. You got to remember that, a lot of lives have been disrupted.
And Carol Massar, thank you so much for that.
Welcome.
That leads to our best conversation of the week, without question.
Wait, you said Tim did a better job than me. I took it.
Matteo has a deciding ballot on that.
Anyway.
The best conversation of the week, Anastasia Amoroso of ICAP. Not on her call on the equity market. She's enthusiastic and resilient to own stocks. But her discussion on her Eastern Europe and Anastasia Amoroso, thank you for telling us about all of that. We're going to leave you. Carol Massar said if Kelsey's going to get re-signed with Kansas City, it's got to be all Taylor. We're all Taylor. Have a great weekend.
Down, he says, baby, is something wrong? I say nothing, I was just thinking how we don't have a song. And he says,